Welcome back to the European market open. A minute to go until the start of cash equities trading for this Monday morning. Here are your headlines. Virus jitters take a hiatus. Stocks trade higher after last week's sell-off. Traders look ahead to Jackson Hole. Afghanistan in turmoil. President Biden expands the evacuation beyond Kabul airport amid criticism of his response to the crisis. The G7 meets tomorrow. Plus, just 5 weeks before Election Day, Angela Merkel's bloc slumps to an all-time low in the polls as her preferred successor fails to impress German voters. Let's take a look at the markets then now as we are 20 seconds away from the start of the European equity market open. And European equity market futures point to the upside, and increasingly so. In fact, CAC 40 futures up by 1.2%. As you can see, Euro Stocks 50 futures more broadly to the upside, up by 0.9%. And US futures also pointing higher this morning. We're through earnings season, of course. We're still preoccupied by some of the same negativity around last week to do with the spread of the Delta variant, to do with the clampdown from a regulatory perspective that we're seeing from the Chinese. Some of these concerns certainly go back weeks, and they're still with us. They're still with us in these markets. We also see quite low liquidity right now. A lot of people taking vacations, of course, over the summer, certainly here in Europe. But net, we saw some heavy selling towards the end of last week and a bit of a rebound on Friday. And we are seeing a continuation of that rebound this morning as European equity markets then get out of the gates in positive form. The French CAC 40 up by 1.1%, the FTSE 100 up by 0.8%. So European equity markets are opening to the upside. Stocks and futures rising this morning after last week's sell-off. But the Delta variant and the prospect of Fed tightening is spreading doubt about the global economic recovery. Investors are now looking ahead to the Jackson Hole Symposium later this week. What clues will that hold? Mark Dowding, Blue Bay Asset Management CIO, is with us this morning. I'm pleased to say good morning to you then, Mark. Thanks very much for joining us. You make the point ahead of our conversation today in your notes that there's still a lot of liquidity around, plenty of cash then to buy any dips. Is that what we're seeing this morning? How convinced are you by the positivity we're seeing in Asia and into futures this morning here in Europe?
Yeah, well, I think it's a calm start to the week, actually. I think what we're seeing is, the news over the weekend that actually Jackson Hole is no longer going to be an in-person meeting. It's going to be in virtual format. If anything, maybe sort of taking a bit of the sting out the tail for what could have been discussed at that particular meeting. I think investors will jump to the conclusion that it's not going to be a very substantive discussion addressing a lot of new information, given that it will just be in virtual format. So with this sort of maybe the fear that something new could happen at Jackson Hole, which could rile equity markets. It's not surprising to see sort of volatility coming off and markets sort of starting the week in a fairly sort of upbeat, sort of benign fashion, particularly with Asia coming through a little bit better this morning.
That's an interesting take then on the down. You see it as a downgrading of the relevance, I suppose, or the significance of Jackson Hole. Then the fact it's going to be more, it's going to be a virtual summit now. Mark, what do you make of the Fed's reaction function to the Delta variant right now? We heard some comments at the tail end of last week from one Fed official who'd been previously prepared to countenance some taper talk in the September meeting, and now saying he's open to delaying that. Do you think that the Fed is minded to push conversations later into the year around tapering because of the spread of the Delta variant, or do you think they're just not going to be put off course by that?
Yeah, look, I think the fact that we have a bit of uncertainty will sort of play into the hands of those who just want to wait a little bit longer. It could have been the case that we saw a taper announcement in September. This could now be sort of pushed back towards November. I think maybe the other interesting element to this will be we could get a somewhat later taper, but if all goes well, the period of the taper could actually be a shorter taper. So I wouldn't be at all surprised. I continue to look for the idea that taper, as it comes, can actually be completed by the middle of 2022. And you can still see higher interest rates before the end of next year if the economy continues to perform on the track that we're looking for. But generally speaking, in this particular moment, we almost have this tussle between the taper and the delta in the two sort of forces driving markets. And in the short term, delta is the one that's in the ascendancy. But I do think at some point we'll be looking beyond the crest of the delta wave. And indeed, in that light, it's encouraging, obviously, to see states like Florida, which have been worst hit by delta. The daily infection rate looks like it's peaked out now over the course of the past week. So the same as we saw in India, as we've seen in Europe, this wave does hit hard, but it does tend to peak, and hopefully we'll be looking beyond that before long. But just at the moment, the Fed needs to be in no rush.
The Fed needs to be in no rush, and yet you do think, Mark, that the first move up in interest rates could come at the end of next year. That doesn't seem to be the median view. Just looking at .go, there are Fed officials who do see hikes by the end of next year, but there seems to be the median view seems to be that those will come in 2023. What's the risk, do you think, to your view at this point?
So obviously the risk to the view that I'd be putting forward is that actually growth disappoints next year. Inflation comes out sort of lower than I've been projecting. I've thought that inflation, although some of it's transitory, we will see some lasting pickup inflation, and inflation would remain well above the Fed's target, at sort of north of 3% perhaps during the course of next year. But I would sort of voice at this point, as long as we're able to successfully move beyond COVID in the quarters to come, I would sort of reiterate the point that we've got a whole load of fiscal stimulus currently being discussed. That's going to be sort of giving a further lift next year to growth prospects. Also, the other thing that you need to think about in terms of projecting the economy is if you look at real rates today, if you look at financial conditions indices, these imply a lot of stimulus still hitting the economy. In many respects, we're actually hitting the economy with more stimulus today than we were 12 or 18 months ago in the very beginning stages of the pandemic, when markets were in a very difficult state. And to think that we're delivering the same amount or more accommodation now than we were then, I think speaks to me on a forward-looking basis that growth is going to continue to run pretty hot, and interest rate sensitive sectors of the economy should continue to do pretty well. We look for housing to do well. We look for business investment to pick up. We think the labour market is going to recover. If anything, there's shortages of jobs or shortages of workers, I should say, in some sectors. We see this feeding into inflation, into wages. And so I think that there is every reason to believe that we are going to be on a course where the Fed is going to be normalising policy, perhaps sooner than many would currently expect, faster certainly than implied by the most recent dot plot.
Okay, Mark, thanks very much. Stay with us. Mark Dowding, Blue Bay Asset Management CIO, stays with us a little bit longer here on the European Market Open. Coming up on the programme, just 5 weeks before Election Day in Germany, polls show Angela Merkel's preferred successor, Armin Laschet, failing to impress voters. We'll get a further update from Berlin on that story next. This is Bloomberg.
They have been looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the European Market Open. 10 minutes then, exactly 10 minutes into our European trading session this Monday morning, and European stocks aren't moving higher, up by 0.6% on the Stocks Europe 600 this morning. And we've got a host of really interesting movers actually for you this morning, despite the fact we're through earnings season. We don't have a lot of that to deal with, but we do see Sainsbury's, the UK grocer, UK retail stock, to the upside, up by 6.4%. Reports over the weekend of the potential for private equity interest coming through in weekend newspapers. That's a story that's done the rounds before, of course, in part because of the real estate assets that this business has. It's long been talked about as a takeover target, and we see that some of that takeover talk is back in the newspapers at the weekend, and it is having that upward impact. Let's get to the luxury sector, because we actually see a real rebound in the luxury stocks this morning. We can see Kering is higher, LVMH, Richemont, Burberry. Perhaps just a rebound from last week's losses is the big theme here. We saw that the sector was really hit on the China-related sell-off that we saw last week. Of course, part of the Chinese aims seem to be around reducing wealth disparity, and perhaps some of the luxury names in Europe that have done so well in China were feeling the pressure from that last week and then rebounding this morning. We also saw a recent upgrade from Bank of America from their team. That was actually Friday morning, but perhaps that's still working through as well. That as a result of some of the heavy selling that we've seen in last week's session. And moving on then, one other for you, Sembra Bank, this over in Switzerland, a small banking business by global banking standards, ending a credit card partnership that they have with Migros. They're warning that will hit their net profit in 2022. So we keep that stock in focus. The stock is down by 29% in this morning's session. Let's get a Bloomberg Business Flash then. Some of the top corporate stories we're focused on. Here's Laura.
Thanks, Anna. Bloomberg has learned that Janet Yellen has told senior White House advisors that she supports reappointing Jerome Powell as Federal Reserve Chair. The White House has been casting a wide net for possible candidates, with Powell's 4-year term set to end in February. The U.S. Treasury Secretary's backing would greatly increase Powell's chance of reappointment. LG Chem shares have tumbled the most in 12 weeks after General Motors recalled its Bolt electric vehicles for the 3rd time in 9 months over the risk of battery fires. The US carmaker wants LG to cover the cost of the recall, which could reach $1 billion. GM is to replace battery modules in more than 73,000 cars. Shares in China Evergrande have fallen on a report that it may sell its Hong Kong headquarters building at a loss. Singtel Daily reports the debt-laden developer could get 10.5 billion Hong Kong dollars for the office tower, less than the 12.5 billion it bought it for in 2015. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura writes here in London. Now, with just over a month to go before Germany's general election, the latest polls show support for the Chancellor Angela Merkel's party, the CDU, and its affiliate party, the CSU, that has slumped to an all-time low. Meanwhile, the Social Democrats have risen to an almost 4-year high. Bloomberg's Maria Tadeo joins us then from Berlin. Maria, good morning once again. So the campaign has officially started now, just some 5 weeks to go. The CDU, it seems to be, though, in a precarious spot. Tell us about the plight of Armin Laschet and what he's suffering at the moment.
Yes, Anna, and what we're seeing right now here in Germany is the CDU in free fall. You're looking at a party that's lost in the space of weeks 10 percentage points. And when you look at Armin Laschet as an individual candidate, the picture gets even more complicated. Now, in terms of the weekend, we did get the party trying to regain momentum in this campaign to inject new life into the campaign election. And we had Angela Merkel on a big event on Saturday. We also had some of the big heavyweights coming out and saying the CDU is a party that is effective, that has a history in dealing with big problems. They also come up with this line that we're sexy, we're also solid. Of course, that created a big fuss to some that would argue, sexy and solid is not something that you would describe the Christian Democrats in Germany as. But, it was, again, part of that hope to inject momentum in this campaign. But the numbers, of course, are not looking good. The CDU is now polling 22%. It's really neck and neck with the Social Democrats. It has been a whole shift in direction and in dynamics in this election where the CDU at one point was polling very well first, and the SPD, the Social Democrats, were really behind in a third position. What we see now is that the German election now, it's pretty much a duel between Armin Laschet and Olaf Scholz, the finance minister. When you look at the Greens, they really have stalled now, and they have not been able to breach that ceiling of going beyond 18%. So it does look like this is going to be a two-man situation, Olaf Scholz versus Armin Laschet.
Yeah, it's certainly a really interesting a tagline for a political campaign, and one that I know, as you say, has prompted some criticism. The two-party coalition, that was a lot of people's base case. So thinking about the role of the CDU, the CSU, and the Green Party, that was a lot of people's base case for quite a while. Many people having to reassess that then, the closer we get to the election.
Yes, and Anna, that was the base case, as you say. The idea, especially in markets for a while, was that this was going to be a two-party coalition, that this was a story about the CDU and the Greens coming together. To some, that was a perfect scenario. You have the continuity from the CDU, you have the capital and climate coming together. Now, when you look at polls, and again, these are polls, there's still 5 weeks to go. A lot can change, and a lot has already changed in the dynamics. But what they point to is that this is now a three-way coalition. This is not just down to two parties, but also key is that Germany could turn both ways. You could have a coalition led by the SPD, the Social Democrats. You could have an alternative one also led by the CDU. So you're looking at Germany going both ways, right or left, potentially. So this is now an election that is much more open and much more volatile than we thought it would be just a few weeks ago.
Yeah, a lot more uncertainty then, further options then in terms of how this plays out, needing to be considered by those who are analysing the outcome. Maria, thanks very much. Thanks for joining us. Maria Tadeo in Berlin as we count down to the German election. And tomorrow, on that note, Bloomberg will be holding a webinar with the Bavarian Premier and leader of the CSU, Markus Söder. Earlier this year, Söder competed with the CDU leader, Armin Laschet, to become the bloc's Chancellor candidate, as Armin Laschet doesn't seem to be doing as well as many had hoped, certainly from the CDU side. In the latest polling, where does this leave Markus Söder? What are his thoughts and reflections on where we've got to, and what role for him from here? Let me just get to some breaking news as well. We've got some French PMI numbers coming through this morning. The manufacturing PMI, 57.3, broadly in line, a little ahead of the 57.2 that was forecast. And the services PMI number falling to 56.4. That was against a forecast of 56.3, so not a million miles away from where we had expected these numbers to land. But still, there we are. Those are the numbers that we have this morning. Mark Dowding, Blue Bay Asset Management CIO, is still with us. Let's reflect on the German political story then, Mark, and also some of this latest data coming out of France. But I'll start on German politics. What's at stake here for you? When our colleague in Berlin there, Maria, just painting a picture of something that looked as if it was fairly easy to assess where it was heading, to something that looks a bit more uncertain. And Olaf Scholz doing pretty well now in the polls, and Armin Laschet less so. What assumptions are you making, Mark, about the significance of this German election?
Well, I think the first thing I'd say is often you look at polls and it's a question of momentum. And if you look at the polls at the moment, I'd be personally thinking that we'll be seeing Scholz as the next chancellor. I don't think there'll be a grand coalition. I would have thought there would be SPD along with the Greens and maybe the FDP would be almost my sort of base case at this particular point, because I think that the polls are going towards the SPD and that's where the momentum lies. But there are many different sort of permutations. And at the end of the day, I've got to say that German politics probably isn't going to matter very much to financial markets. I think that you end up with sort of orthodoxy, continuity of many policies, almost regardless of the coalition that you see in Germany. The only thing that would really shake things up is if you ended up with the SDP in coalition with Die Linke, and you had a much more left-leaning sort of coalition along with the Greens. But that red-green scenario seems very unlikely. It's something that Scholz has ruled out. So I don't really see a really big story that's going to drive markets. Thankfully, the AfD are polling nowhere in this election. That would have been the other risk factor ahead of the German elections. It's a risk factor, the far right, of course, in the French elections that are going to be coming up next. But otherwise, I think we're looking to move beyond the German elections. We're looking for the big sort of story is going to be the renegotiation of the fiscal compact, which is going to be something that sort of plays out in Brussels in the months after the German elections.
Yes, in years gone by, I would have thought that financial markets might have been a bit spooked by, you know, a bigger role for the Green Party in German politics, but that doesn't seem to be the case, Mark. Is that because Green Party policies are maybe much more mainstream, they're much more attuned and aligned with where asset managers and money is flowing at this point? Is there risk in the Green Party and its role in Germany or not these days?
Well, I've got to say, for start, all investors these days, we're all embracing ESG, right? So we all like to think of ourselves as being green or going green or getting greener. And so I think you're dead right. I think green has become very, very mainstream. I think you look at a lot of mainstream parties. You look at UK politics, the direction of travel in the Conservative Party is very much towards something that's more environmentally friendly. So I think where the green agenda may have been a more extreme position 5 years ago or 10 years ago, it feels like a much more mainstream proposition at this particular point. Also, the fact that Greens are actually slipping themselves in the polls along with the CDU does suggest that we're not going to be seeing a Green Chancellor sort of taking office here. I do think that, as mentioned, Olaf Scholz seems to be the individual with the momentum behind him at this particular time.
Yeah, certainly the polling suggesting that momentum. Mark, thank you very much. Thanks for joining us. Mark Dowding, Blue Bay Asset Management's CIO. Coming up on this programme, Sweden's Prime Minister unexpectedly announces he'll step down after 7 years in power. We're live in Stockholm next. This is Bloomberg.
Estava há 1 ano sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo do Milton Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open. 23 minutes into our European trading day, and European equity markets point to the upside, up by 0.6% on the Stoxx Europe 600 this morning, picking up on Friday's positivity, picking up on the positivity we see through the Asia session with MSCI, Asia Pacific and Chinese markets crucially playing ball on the rise, up by 1.2% on the MSCI Asia Pacific. Now, Sweden's Prime Minister Stefan Löfven will step down in November after 7 years in power. His unexpected announcement in a speech on Sunday could open the way for the Finance Minister Magdalena Andersson to become the country's first female leader if picked at her party congress in early November. Let's get now to Niklas Rolander, who's Bloomberg's economy and government reporter over in Sweden and who joins us on the European Market Open. Niklas, great to speak to you. So after 7 years, a real political survivor in Stefan Löfven, what's the significance of his departure then for Swedish politics?
I mean, with Stefan Löfven going out, the Social Democrats will lose a deal maker, really, and a political Houdini who's always seemed to manage to somehow to be able to wriggle out of difficult situations and stay in power despite having really a majority in parliament against him. So that's a big task for his successor to manage to navigate this new political landscape in Sweden as well as he managed to.
Yes, indeed. So a lot of expectation then on whoever does succeed him. And I mentioned the finance minister and her role and expectation around her. What is the process for her to become leader if she is picked, or who are the other contenders who could step up?
It's a rather opaque process, has always been in the Social Democratic Party. They have a nomination committee that will now speak to candidates and speak to local representatives, and they will name a nominee that will probably be elected. And I think the general consensus is that if Magdalena Andersson wants to become the new leader and also the prime minister, she will get the nomination and be confirmed by the party congress. But there are other names as well. There are some ministers who are probably keen on getting that role, but she's first in line, and okay. I think it would also be difficult for the party to choose some man as a successor to Löfven.
Niklas, thank you very much. Thanks for bringing us the latest on that story. Niklas Rolander, Bloomberg's economy and government reporter in Sweden.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the European Market Open. 30 minutes into our European trading session. European equity markets up by 0.5% on the Stocks Europe 600. To the upside then, let's have a look at the sector breakdown and see where we are on that particular picture, because that'll tell us something about what is making these big decent moves to the upside. And retail is certainly up there. Retail and luxury goods, two themes to focus on. We just got a glimpse of the Sainsbury's share price, up really substantially in today's session, up by 9.3% in fact. There's been reporting over the weekend that's talking about the possibility of private equity interest. That's the story we've talked about in the past. But some of that newspaper reporting clearly touching a nerve, and that stock, as I say, up by more than 9% this morning in the retail space. Adding to that the fact we've got luxury goods moving substantially higher this morning, that on the back of heavy selling of that sector, which is very exposed, of course, to the wealth divide in China. So any attempts to reduce that wealth divide will no doubt weigh on luxury goods here in Europe. So that's the picture we have for you coming through on the GRR, on the sector picture. Let's just get to some breaking news around the German economy. We've had French PMIs out already this morning, so let's get to the German numbers. The August manufacturing PMI coming in at 62.7. That is against a forecast of 65. So although this is well above 50, so very much in expansion territory for the manufacturing number, that is still below the forecast, quite substantially below the forecast, in fact. And the services number, that doesn't seem to be all that far away from the forecast. So that has come in at 61.5, so actually a little bit better than the 61 that had been anticipating. In terms of any movement in the euro as a result of this, just putting up the session chart, if you like, there we go, of the euro. Not a great deal of movement in the euro. As I say, we had French numbers out earlier on today, and now we have that German number, pretty mixed versus forecast, better on the services side, worse, fairly substantially worse on the manufacturing side than anticipated. Let's get a Bloomberg First Word News update. For all the top stories we're covering here this morning at Bloomberg, here's Laura.
Thanks, Anna. China has brought local cases of COVID down to 0 again since the news of a cluster in the eastern city of Nanjing a month ago. The country has carried out 100 million tests, imposed travel bans and enforced strict lockdowns. In Australia, Prime Minister Scott Morrison says it's highly unlikely his country will ever return to no COVID cases. He's sticking with his plan to remove virus curbs when vaccination targets are met. Almost a fifth of companies advertising COVID tests for travellers returning to the UK from abroad face removal from the government's list of providers. More than 80 firms will be issued a 2-strike warning after the government promised to clamp down on the high cost of tests. Bloomberg estimates UK travellers have spent at least £380 million on tests in the first 6 months of this year. President Biden says he may extend the August 31st deadline for a full U.S. withdrawal from Afghanistan. He's also promising expanded efforts to help evacuate Americans who have struggled to reach Kabul airport. Some 25,000 have been airlifted so far. Meanwhile, UK Prime Minister Boris Johnson is to convene G7 leaders on Tuesday for urgent talks on the situation in Afghanistan. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. Now, US Vice President Kamala Harris, as we were just hearing from Laura, has begun her tour of Southeast Asia in Singapore, aimed at boosting ties with the region. She's due to hold meetings with the Prime Minister. In fact, she's already held a meeting with the Singaporean Prime Minister and at least a press conference, and she's going to be talking to business leaders. But the trip risks being overshadowed by questions over events in Afghanistan. We've certainly seen that already in the first press conference. Thomas Giff, UCL Director of the Center on US Politics, joins us now. Thomas, very good to speak to you. So clearly the US in Asia trying to have a different conversation, but facing many questions already. Kamala Harris faced many questions as Vice President today around Afghanistan, around the chaotic withdrawal of the United States and US troops and personnel from Afghanistan. That's going to be the risk with trying to set out new policy initiatives on this visit, isn't it, Thomas? That it just becomes overshadowed by what is our big foreign policy questions around Central Asia.
Well, exactly, Anna, and thanks so much for having me. I think that there's no dispute that Harris's trip takes on heightened salience, given that it occurs in the wake of the botched U.S. withdrawal from Afghanistan, and to some degree, it will inevitably be overshadowed by what's happening there. But I think it only reinforces that this trip really has two external audiences for Harris, the countries in Southeast Asia with whom she will be engaging, but also America's Western allies who are keeping extra close tabs on how the administration is framing its foreign policy right now. Biden has pledged, of course, that America is back, but many experts think that what unfolded in Afghanistan considerably corroded the White House's credibility with partners like France, Germany, the UK, and elsewhere. It's possible to overstate the extent to which these critiques on Afghanistan have clear implications for America's commitment to working with allies on shared objectives in Asia. But I think much of the West wants reassurances that Biden's approach abroad isn't just a diluted America First foreign policy minus the Trump bravado. So part of Harris's objective with this trip to Vietnam and Singapore will be to reiterate the administration's commitment to smart, engaged multilateralism.
Yeah, and Thomas, I mean, President Biden certainly didn't stand on an America First platform, but he did stand on a platform that talked about getting out of what he called forever wars. And I suppose many U.S. allies now asking questions about what that means in terms of the commitment that the U.S. has to its allies. And is that a crucial question as she tours, as we're seeing in these images, as she tours Singapore and other places?
Well, certainly that's going to be on the minds of a lot of Western allies, and they're going to be looking to this trip to see if there's kind of a pivot here. You know, again, I do think that it's possible to overstate the extent to which what happened in Afghanistan really erodes trust across the board with America's allies, particularly in the West. But it's something that Harris is going to be particularly sensitive to, I think, during this trip, and she's going to be trying to articulate this vision that the United States, irrespective of what happened in recent weeks, is still devoted to bringing countries together and finding areas of shared concern.
We've talked a little about the trip she's making, Thomas, and she's going to be going from Singapore to Vietnam, and many people have been drawing parallels between Kabul and Saigon during the Vietnam War. Is that's going to be something that keeps this subject then very much to the fore as she makes this trip?
Exactly. The optics, I think, are really unfortunate for this administration because you're seeing those parallels being drawn constantly, and it's going to be shown in the news over and over. And I think it's something that Harris would rather not have deflect attention from the real issues at hand, because there are real issues at hand here that need to be dealt with. The Biden administration has insisted that it's committed to working with Western allies across a number of different global priorities, and chief among them is countering concerns about rising military and economic expansionism of China. But the White House knows that to achieve its broader long-term strategic objectives in Asia, to promote democratic reform, to foster trade and open markets and so on, that it needs support from countries in that region as well. Against that backdrop, Vietnam has balked at China's territorial claims in the South China Sea. Singapore has taken issue with kind of China's larger economic presence in Southeast Asia. So this trip is really important for Harris, and she'd rather some of these other questions not distract from what she's trying to accomplish.
Yeah, what is the message? You mentioned a few audiences that Kamala Harris, as vice president, is going to be speaking to on this trip then, Thomas. What is the message going to be for China? What should the Chinese administration be watching for and take from this visit?
Well, I think Vietnam and Singapore want assurances from the U.S. that America is willing and eager to serve as a crucial partner in Asia. That includes offering economic competition with China that can help diversify their own economy. So that's something that Beijing is going to be looking at. It also includes support on a range of security issues, also something that will interest Beijing. Still, I think both countries, Singapore and Vietnam, are looking to avoid making any firm commitments to the U.S. that make it look like they're taking sides against China. That's the case because ultimately, even if Vietnam, Singapore, and other Asian countries harbor concerns about China's posture in the region, it's too reliant on Beijing to fully pivot away from it, and anything remotely resembling decoupling isn't an option. So for Harris, I think it's going to be a balancing act in trying to advocate for a range range of policies that are politically palatable that the U.S. has a shared interest in with Vietnam and Singapore. That includes on China, but also threats to cybersecurity, disruptions to global supply chains, and COVID. This trip, I think, for her is less about hammering out specific policies and more about setting a tone for future relations. But certainly, Beijing and Chinese leadership are taking a keen interest in what's unfolding.
Thomas, thanks very much. Thanks for joining us. Thomas Gift, UCL Director of the Center on U.S. Politics. Thanks very much for joining us with a really interesting take and preview of what we're going to hear from Kamala Harris, the purpose of her visit, and the context, the important foreign policy context surrounding Afghanistan, of course. Coming up on this program, then, blindsided by COVID, has the Fed's new monetary policy framework gone past its sell-by date already? Today's big take looks into whether the central bank's policies work for the current world. That is next. This is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
The skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
We're in still completely new territory.
I think this Jackson Hole is going to be very interesting.
The biggest risk for markets is simply we're learning as we go in terms of what the policy responses are going to affect.
I think the risk today is that inflation overheats. The risk is not that, they've achieved their goal.
The Fed's motive here is to keep the financial system functioning and liquid, which they've done a very good job of.
But that inflation targeting dynamic is I would argue, a bit archaic, as recent as that was, a bit archaic today in an environment where the risk to the system is an overheating inflation.
It feels like everything has been happening at lightning speed. We've gone through an entire economic cycle, it feels like, in the space of a few months.
And at this point, when the market and the economy can carry itself, what we need to see is the Fed beginning to mop up all that extra money.
some of Bloomberg TV's guests there talking about the Fed's monetary policy framework as we edge towards the Jackson Hole Symposium. Now, thinking about the big picture here, about the Fed's communication strategy, about its goals, COVID-19 seems to have upended the world in 2020, of course, and in response, the Fed implemented a new framework for monetary policy. However, a year on, doubts are rising about the wisdom of holding off on tightening for a prolonged period in the face of rising pressures on consumer prices. Has the framework already passed its sell-by date? Joining us now is Simon Kennedy, our executive editor for economics. And I'm just looking there at that image. Good morning, Simon. Looking at that image of Jerome Powell, looking a little sad, pensive, as he's shadowed there in that image we just showed by the backdrop of Jackson Hole. It's going to be a virtual summit, of course, so they won't actually be there amongst those mountains. But certainly our thoughts will be on that conversation coming through from Wyoming. Powell, though, is going to be thinking about policy. He might also be thinking about his own future, because a lot of people are asking questions about that. What are we hearing about his future?
Well, he'll have got a good lift over the weekend. In debate is whether he gets another 4-year term, and that's in the gift of Joe Biden and then congressional confirmation. The reporting at the weekend by Saleha Mosey and Jennifer Jacobs in Washington is that he's won the backing of Janet Yellen, his predecessor and now Treasury Secretary. So that's a big voice in the administration. If she throws her weight, as officials say is likely, behind Jay Powell for another 4-year term, that's a big thing. It'll carry enormous weight. It adds another reason to the list of reasons for Joe Biden to give Jerome Powell another 4 years. That decision is expected early September.
Okay, so if we think about what he's achieved at the Fed, one of the big things has been, of course, the pivot in policy that we saw around COVID, but maybe driven really by decades of inflation failing to come up to target. And it seems, have they been caught kind of on the wrong side of the COVID crisis in that sense? Was their policy designed very much for previous eras, for eras where it was difficult to generate inflation? Now they have plenty of inflation. They have different problems.
So this was already in track before COVID came along. The actual implementation of it was delayed by COVID by a few months. But certainly when you look back at recent history, you see very slow inflation. Just if that's the target for the Fed and they've kept inflation so slow, what have they been doing? COVID obviously accelerated the decision in the end, and they introduced it a year ago. And basically the decision is to allow, where you can, allow inflation to run a little hotter, a little above target, in the hope that that makes up for losses in the past. And that you see greater employment. Thing is, things change. As Ann Richards said, we've seen several economic cycles within a year. We now have inflation well above target, and we have companies saying that they can't find some of their workers. So how does he kind of match the reality with this vision? You can't dump the vision at the first obstacle, and so that's going to be a concern for him. He's talking Friday about the economic outlook. He may start to try and square what he said a year ago with the situation he sees now. The main argument for maintaining the new policy is that the inflation we're seeing now, in the eyes of many at the Fed, is it will prove transitory, will pass in time, and that will then allow them to kind of go full speed ahead on this other bigger policy, this grand strategy, so to speak, which will allow them to set interest rates with the hope of inflation a little above target. And let's see how hot that labour market can run.
Yes. What is the talk about how transitory inflation is proving to be then in the United States, and when we get to a point, Simon, where we know if it's transitory or not?
Well, that's the big debate. You've got people like Larry Summers on one side arguing that that a lot of the inflation that we're seeing is not transitory. You've got the Fed officials saying, or most of the Fed officials, not all the Fed officials, but Jay Powell among them, saying that that inflation will fade as the kind of the economy returns to normal. An interesting point made in the big take by Rich Miller that's out today, and Mohamed El-Arian, no stranger to this show or to Bloomberg in general as a contributor. He makes the point that there's about a 40% chance that the Fed actually will kind of have to slam on the brakes, perhaps harder than it envisaged. And so that's just quite a debate going on.
Simon, thank you very much. Thanks for joining us. Simon Kennedy, our executive editor for economics, with us on set this morning to take us through that big take. Now with the Bloomberg Business Flash, here's Laura.
Thanks, Anna. Bloomberg has learned that Janet Yellen has told senior White House advisors that she supports reappointing Jerome Powell as Federal Reserve Chair. The White House has been casting a wide net for possible candidates, with Powell's 4-year term set to end in February. The U.S. Treasury Secretary's backing would greatly increase Powell's chance of reappointment. PayPal is expanding its crypto service beyond the U.S. The facility, which will be rolled out this week, will allow clients in the U.K. to buy, hold, and sell cryptocurrency. The move comes as Bitcoin tops $50,000 for the first time since May. LG Chem shares have tumbled the most in 12 weeks after General Motors recalled its Bolt electric vehicles for the third time in 9 months over the risk of battery fires. The US car maker wants LG to cover the cost of the recall, which could reach $1 billion. GM is to replace battery modules in more than 73,000 cars. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright here in London. Coming up on this programme, call it the pretty big short. Michael Burry's next bet is a wager that long-term US Treasuries will fall. We'll discuss that and more with Ben Ram from our Markets Live team. That's next. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open, 8:52 here in London. So 52 minutes into our European trading day. We're still positive, not as much as we were, but we are positive, up by just 0.25% on European stocks broadly. So losing a little bit of our earlier momentum. US futures point to the upside by around 0.2%. So slightly more fragile this rally, this rebound, than it maybe was just an hour ago. Let's bring into the conversation Ven Ram, Bloomberg's Markets Live macro strategist. Ven, very good to speak to you. So Jackson Hole very much on many people's minds this morning. I can talk to you about that. I can talk to you about the weakness in the dollar, but I also want to talk to you about treasury markets. 1.26 is the yield on the US 10-year right now. And we had some interesting reporting over the weekend about Michael Burry, of course, of Big Short fame, and what his plans are with regards to treasury markets. Just like many people, he's putting in a big call on treasuries. Tell us about what he's doing, what he's aiming for with his strategy.
Morning, Anna. I think Michael Burry's trade is all logical left-brain thinking, if you ask me. look, the U.S. economy is likely to expand at its fastest pace in decades this year, at more than 6%. Next year won't be too shabby either, at 4% plus. Despite recent concerns about the variant, those are very good growth numbers, and I will take them any day. Given that, you would expect both real and nominal rates to be higher, in fact, a lot higher, you could argue. However, we saw that that hasn't quite happened since the start of the second quarter. So the question really comes down to Barry's timing. As Warren Buffett says often, the markets can be insane a lot longer than you can be solvent. So let's see whether Barry's big short, which has time decay built into it because he's bought into them in the form of options as opposed to just spot treasuries, ends up in the money. And that's the big question for me, is the timing. Anna?
So it's not that you disagree with what he's trying to do, you just think it's very difficult to time it right then? Exactly.
I think, you could have argued since the end of the first quarter that rates need to go up. I mean, a lot of people at that point were saying Treasury 10-year yield should go to 225, and you would mean, and you would expect that to be a logical, rational thinking given where the economic growth is. But that hasn't happened. So what makes Barry think that that's going to happen over the next 2 quarters is questionable. Of course, it's got logic written all over it, but the timing of it, I'm not too sure. And whether it will pay off big time, by yield going up not a whole lot, I'm not too sure.
Yeah, big question for many investors, for many different asset classes, not just treasuries, how long we see rates as low as they are. Thinking, a linking question, I suppose, a linking thought, the dollar a little bit weaker this morning. It's the first time in a number of days, I think, that we've seen this. The dollar a little weaker, down 0.25% this morning on the dollar index. Ben, what do you think's driving this? I mean, we see a risk-on picture through the Asian session this morning, but has anything fundamentally changed from last week?
Well, we got a bit of a denouement on the commodity sell-off. Now, that has thawed a bit, and we saw the dollar's buoyancy pinned to what was happening in the commodities complex last week. And now that commodities have got a bit of a breather, I think the dollar people are reassessing their view on the dollar. If you look at where 5-year real rates are in the U.S., I would say that the dollar is a bit ahead of where it needs to be. Unfortunately for the dollar, what is holding it back is the lack of the reflationary trade. Treasury yields not going really higher. And that is going to be an impediment for the dollar going forward, albeit I expect the dollar to be still supported around current levels.
Ven, thank you very much. Thanks for joining us. Have a good Monday. Have a good rest of the week. Ven Round, Bloomberg's Markets Live macro strategist. No doubt catch up with Ven later on this week. 8:56 in London, then 56 minutes into our European trading session. And we are losing momentum a little bit. That rally that we put in place some 56 minutes ago, just looking a little more fragile than it was. But we are still up by 0.2%. Some of those luxury names have been doing pretty well. And retail names have been doing pretty well in the early part of this morning's session here in Europe. That is it for the European Market Open. Surveillance Early Edition is up next. They'll continue to take you through this latest market action, this rebound. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. the US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
Obviously, you feel, distressed when you see people realizing what they're going to lose as a result of the Taliban coming back into power.
The Taliban is going to find its victory very challenging. Afghanistan was an economy supported largely by foreign aid.
There'll be plenty of time to criticize and second guess when this operation is over. But now, I'm focused on getting this job done.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Monday, the 23rd of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Dip buying ahead of Jackson Hole sees stocks climb and futures climb. Bitcoin breaks above $50,000 for the first time since May. Angela Merkel's CDU slumps to an all-time low in the polls a month away from Germany's elections, while she pushes for sanctions against Russia if Nord Stream 2 is used as a weapon. And President Biden expands the U.S. evacuation efforts in Afghanistan beyond Kabul airport amid criticism of his decision to push ahead with withdrawal. G7 leaders meet virtually tomorrow. So stocks and futures on the rise this morning as traders take advantage of last week's sell-off. Treasury yields also ticking higher as demand for havens wanes, and Bitcoin hit $50,000 for the first time since May. Markets largely in a holding pattern as investors look ahead to Jackson Hole Symposium on Thursday. Well, joining us to talk about everything in the markets is our Eddie van der Veld from our M-Live team with the CFA. Eddie, we have a lot to talk about because it kind of feels that the market is positioned, I guess 4 or 5 months ago, most analysts we spoke to were expecting the S&P 500 to go higher.
Right.
But actually now there's a real dichotomy about, what they're expecting it to do. And I wonder whether Jackson Hole will kind of distill minds.
I think Jackson Hole will absolutely distill minds. I think there's a lot of pressure on Jackson Hole, and I think there is a little bit of scope for, a little bit of disappointment, a little bit of too much expectation going into Jackson Hole. But I do think that this is just the culmination of, getting traders to focus on this dichotomy between on the one hand inflation and on the other, growth returning, and do we keep growth going, and the Delta variants out there, and all of these things, and just making traders pick a side. And I think that's where we're going right now.
So does it mean we'll probably see a lot more choppy markets like we saw, for example, in commodities?
I think that is exactly right. I think which way we're going to go is unclear at this moment in time, but I think there's going to be a little bit of a pull and tug in both directions where markets try and decide, who's in the majority here. Liquidity is still very thin, and I think that adds to, just the fact that we're in summer markets and it is low liquidity and it is low volumes. I think that adds to the bit of choppiness that you're pointing at there.
So what are you looking at?
There's quite a lot in markets at the moment. I mean, today's PMIs I thought was particularly interesting. I think what we are seeing from the PMIs, from the German number and from the French number, is that we're seeing that continued shift away from the goods demand only towards services demand as well. And I think that pushes up wages, right, in Western markets, which potentially fuels the expectation that the Fed tapers as soon as this year.
I mean, I'm so glad I have my crypto guru also, you know, to get me started on Monday, because Bitcoin above 50,000 at the weekend, and then a lot of momentum also maybe coming from PayPal saying that they will offer crypto to UK users.
Way faster. This bounce back has come way faster than people had expected. You know, I mean, in previous sell-offs, 2017, we saw crypto sell off and it fell by about 80% and then had a multi-year period. And the only thing that got it back up to the highs was when the supply of Bitcoin started tapering off. That's not the case this time. There's a lot of other things to be bullish about. As you say, PayPal in the UK. Now, it's not as big news as the previous PayPal, announcement in the US, because here in the UK there are other companies, Revolut and other companies that already do this. But at the same time, it just shows that access points to Bitcoin are increasing. And if we see that US ETF, I think that could be really interesting.
Is there anything else, Eddie, that you're looking at? I know we were chatting about an ETF, or the guy from The Big Short.
Oh, actually, that's such a good story.
It is such a good story.
I mean, look, he's a classic contrarian, but I think that distills back to all of the themes that we were talking about a minute ago, right? He's talking about long-term treasury rates starting to rise, and really we're talking about a trend that's been it's been a lower trend since the 1970s. Treasury rates have been, and if he's right as he was last time, this is for people like Ray Dalio and the risk parity people, for long-term equities. There are so many points where this will actually have negative implications. This could be a bigger short than the Big Short.
Yeah, so we would be looking at like a repricing of almost all asset classes, right?
Absolutely everything. Because at the moment, when you look at US equities, the valuations that they have are all about the discount rate. The risk discount rate's been so low that any future earnings are discounted at this very low rate. But if we start seeing long-term treasuries pick up, and the mechanism would be that inflation starts picking up. So we're back to Jackson Hole, we're back to the Fed. But if we do see that, I think markets across the board could reprice here.
Eddie, thanks so much. Eddie van der Velde there from our M Live team. Now let's keep the market conversation going. We're joined by Ed Smith, Co-Chief Investment Officer at Rathbones. Ed, great to have you on a Monday morning. What are you looking at in the markets? It does seem that half the people are betting that equities go up and the other half down.
Good morning. The latest Bank of America Fund Manager survey says growth and profit expectations have sunk. Goldman's data says that hedge funds have trimmed their leverage. We've had a fortnight of volatile bond yields suggesting uncertainty about Fed policy. Quality factors have been outperforming in equity markets. So in short, investors are nervous, right? They're seeking out shelter. Now, we don't entirely disagree. Since June, we've been acknowledging the risk that leading economic indicators roll over, and we've been adding back a little more to growth and defense to create a barbell portfolio with value at the other end. Tilting to quality definitely makes sense, but we remain firmly overweight equities. The risk of a recession in the next 3 to 6 months we think is low. We think the risk of a monetary policy mistake is low.
Right.
We think, and there could be another run of the reflation trade in September.
What does that... Yeah, I guess you have to get treasuries right to get every other asset class right. What's your call on 10-year treasury?
Yeah, I was talking to our head of fixed income research last week. Neither of us have ever been more uncertain about the outlook for treasuries, which I think is telling in itself. So that's another reason not to make too much of a binary bet, I think, at the moment when uncertainty is high. We think that, at 1.25, 1.26, the 10-year US Treasury is not consistent with the economic fundamentals. There are these huge long-term structural forces pushing down on rates, but not to these levels. Over the next 12 months, we're looking at getting back to around 2%.
Ed, what about the dollar call?
Yeah, so we still think the dollar is overvalued against most cross rates on a variety of valuation frameworks. Whether we look at simple ones like purchasing power parity, or our own sort of behavioral equilibrium model, which looks at relative productivity, relative savings, relative prices. So there is a long-term headwind, and we think really It's only long-term currency forecasts that you can make with any real certainty because there's just they're too fickle in the short term. But there could be some reasons why we get a bit more dollar strength in the near term if this risk-off environment continues, or if the Fed does taper slightly more aggressively, perhaps. But that's not our base case.
Ed Smith, what are you exactly expecting from Jackson Hole? So there was a nice Bloomberg scoop over the weekend. Congratulations to our team in Washington, saying that it's very likely, or actually Janet Yellen has endorsed Jay Powell. That, again, a dovish Jay Powell is actually good for a lot of equities and asset classes. Is that, one of the biggest news that could come out in the next couple of weeks, or are you actually look for some kind of policy indication at Jackson Hole?
Yeah, I mean, it's interesting. I saw that scoop on Yellen. That's very interesting. I thought maybe Lyle Brainard might be the next governor, but I think either way, Brainard or Chair Powell to continue, I think they're two doves, right? So in terms of the market, I think the two tips, the candidates, the continuity or the replacement are two doves. Thinking about Jackson Hole. We don't think we're going to get a little more information on the timing of rate hikes when Powell takes the mic on Friday. Maybe a bit more information about the quantum, but not so much clearer guidance on a start date. Since the last Fed meeting, we've had big disappointing retail sales numbers. We've had a stalling in the ramp up of spending on services as the Delta waves unnerved confidence. Some stalling in, the Fed may also want to wait until we have more clarity on fiscal stimulus. We think that the Fed is not going to divulge too much. There's still a bit too much uncertainty.
Ed Smith, thank you so much. Co-Chief Investment Officer at Rathbones staying with us. Now, coming up, Joe Biden expands his evacuation from Afghanistan to beyond the limits of Kabul airport as he faces criticism for his swift withdrawal. But Chatham House Chairman Jim O'Neill says the U.S. can use the dominance of the dollar to wage a different kind of war against those supporting the Taliban. Well, he'll be joining the program in 20 minutes from now. If you have any questions for him, you can write at IB plus TV Go, or you can IB or tweet me directly at Flacqua. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report.
The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. President Joe Biden says he may extend the August 31st deadline for a full U.S. withdrawal from Afghanistan. He is also promising expanded efforts to help evacuate Americans who have struggled to reach Kabul airport. Some 25,000 have been airlifted so far.
There's no question there will be and should be a robust analysis of what has happened. But right now, there is no question that our focus has to be on evacuating American citizens, Afghans who worked with us, and vulnerable Afghans, including women and children.
Now, China has brought local cases of COVID down to zero again. Since the news of a cluster in the eastern city of Nanjing a month ago, the country has carried out 100 million tests, imposed travel bans and enforced strict lockdowns. In Australia, Prime Minister Scott Morrison says it's highly unlikely his country will ever return to no COVID cases. He's sticking with his plan to remove virus curves when vaccination targets are indeed met. Almost a fifth of companies advertising COVID tests for travellers returning to the UK from abroad face removal from the government's list of providers. More than 80 firms will be issued a two-strike warning after the government promised to clamp down on the high costs of tests. Bloomberg estimates UK travellers have spent at least £380 million on tests in the first 6 months of this year. And Sweden's Prime Minister Stefan Löfven is to step down in November after 7 years in power. His unexpected announcement in a speech on Sunday could open the way for Finance Minister Magdalena Andersson to become the country's first female leader if picked at her party's Congress, which is happening in early November. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Also known as Laura Wright on Monday mornings, where I haven't had my coffee yet. Leanne, thank you. Now, global companies are so flush with cash that they're racing to bring back dividends. According to a global study by Janice Henderson, payouts are expected to reach $1.39 trillion this year, the second highest ever tally. Now, Janice Henderson argues that the pandemic did less damage to corporate profits than expected, and a world awash with liquidity will see a lot of that money returned to shareholders. Let's get back to Ed Smith, Co-Chief Investment Officer of Rathbones, who's still with us. Ed, thank you so much for sticking around. How do you look at dividends, and what does it mean for sectors that you follow?
Yeah, so I mean, I agree that I think dividends are likely to come back. I think the question over the next couple of years is what will corporates do with some of the cash wall that the lucky ones have built up over the last 15 months. Will they return it to shareholders directly via dividends or buybacks? We've seen some resumption in them. Or will they invest it? Yeah, will it be more about R&D, more about capex? Part of that might come down to fiscal policy. Yeah, we're still waiting for the US reconciliation bill. What will happen to corporation tax, and that will there be extra incentives to invest and do R&D? From a long-term perspective, right, and we're long-term investors, we would actually rather see more higher levels of R&D because companies that engage in that tend to have better shareholder returns in the long run.
So, Ed, is there a specific industry or a sector that you want to be invested in because dividends means that you'll reap the rewards?
Yeah, so I think banks is worth a look at. You know, certainly in Europe, there are a lot of restrictions that have been released now. You know, the extent to which bank dividend repayments will come back is still perhaps in doubt, but we know that banks pretty much across the board built up an extraordinary amount of loan loss provisions. Okay, their base case scenarios for the macro outlook was far worse than it's actually than what's been realised in the economy. The unemployment rates that they were assuming were off the chart in terms of what sort of the Bloomberg consensus now predicts. So there's a lot of capacity to take those provisions, redistribute. It's another reason why we think banks are worth a look today.
Do you have any investments in Bitcoin, Ed?
No, we don't. Part of that is for regulatory reasons with our sort of retail client base. But some of our peers, some of the fund managers we regularly talk to, we know they've been adding on asset allocation grounds. We're a bit more circumspect on some of those reasons. So some people think that that Bitcoin could function like a diversifier. Well, as we've seen over the last few months, volatility is huge and it has no negative correlation with equity markets. So it's going to add to your portfolio risk. Some people think it's digital gold, but it doesn't correlate with gold. It doesn't correlate with inflation. So again, perhaps Bitcoin might start to exhibit these attributes over time, but it's not today. So that's a bit of a speculative punt.
Right. Ed, thanks so much. Ed Smith there, Co-Chief Investment Officer at Rathbones, joining us this morning. Coming up, just 5 weeks before Election Day in Germany, and polls show that Angela Merkel's preferred successor, Armin Laschet, failing to impress voters. We'll have that full story next. This is Bloomberg.
What seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, with just over a month to go before Germany's general election, the latest polls show support for Chancellor Angela Merkel's party. The CDU and its affiliate, the CSU, has slumped to an all-time low. Meanwhile, the Social Democrats have risen to an almost four-year high. Well, Bloomberg's Maria Tadeo joins me now from Berlin. Maria, good morning. So the campaign officially starting. The CDU, in a precarious spot, can Laschet make it?
Yes, Francine, in a very precarious spot. I would say the CDU has been in free fall now for weeks when you look at polls. And the thing here, when you look at those numbers, is that the trend has not fully stopped. This is not just a question of them not being able to sustain momentum. This is about the CDU not being able to prevent further declines. When you look at the SPD, it's a very different situation. When you look at the individual candidates, Armin Laschet is in much bigger trouble than the party. This is someone who really has not been able to capture the attention from Germans. If anything, he has not been able to recover from criticism about the management of the floods when he got caught giggling, and this is something that still continues very much to haunt him. Now, Francine, over the weekend, we did get the big party event kicking off the campaign from the CDU. The card that they're playing now is that they have the experience. They also said, look, we're sexy and solid. Some will tell you Christian Democrats, perhaps sexy and solid is not the way to describe them. And if you vote for Scholz, what you're going to get is a very left-wing coalition that will undo everything we've done for Germany. So they're not really playing the fear card. You're not voting for Olaf Scholz. You're voting for a socialist coalition that will come together after the election.
So, Maria, the two-party coalition was a base case. Is it no longer?
Yes, and Francine, that's a very good point, because especially markets, the idea was that we were going to see the CDU in autopilot into the next government, that the Greens would join in, and this was almost like the sweet spot. It was climate and capital coming together. When you look at polls now, CDU, SPD, they're polling 22% each. The Greens are not able to go past 18. It does seem that they have peaked, and they're really not able to capture further votes. So overall, you could look at a situation where this is not just a two-party coalition, but would actually need a third one to prop up the government. But what is also key is that Germany could go both ways. You could have the CDU leading what could be perhaps a green center-right coalition, or actually really go left with the SPD now in government for the first time in 16 years.
Maria, thank you so much. Our Maria Tadeo there with the very latest, of course, on Germany and the election close by. Now, coming up, we consider whether the Taliban's victory over the world's most powerful military will have any implications for the dollar and its role in the world. Chatham House Chair Jim O'Neill joins me next on the program. If you have any questions for him, you can write in IB plus TV Go or tweet me directly at Flacqua. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Dip buying ahead of Jackson Hole sees stocks and futures climb, Bitcoin breaking above $50,000 for the first time since May. Angela Merkel's CDU slumps to an all-time low in the polls, a month away from Germany's election, while she pushes for sanctions against Russia if Nord Stream 2 is used as a weapon. And President Biden expands the U.S. evacuation efforts in Afghanistan beyond Kabul airport amid criticism of his decision to push ahead with withdrawal. Well, G7 leaders meet virtually tomorrow. Good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance Early Edition on Monday, the 23rd of August. So this is what we're looking at for the S&P 500 futures. I know it's one of the rhetorics that we've been talking about quite a lot, but I have to say there was a really compelling Bloomberg piece on the markets saying that the widest range between S&P predictions for the lowest and the highest, that it's the widest range in 3 decades, and it goes to the anxiousness in the markets, which could also lead to choppier markets in the next couple of weeks. Traders taking off maybe last week's sell-off to take advantage and buy the dip while keeping a very wary eye on the Delta virus strains and China's regulatory crackdown. Now, President Biden says he may extend the August 31st deadline for a full withdrawal from Afghanistan. He's also promising expanded efforts to help evacuate Americans who have struggled to reach Kabul airport. Meanwhile, Afghanistan's exiled central bank chief has warned that the new Taliban-led government is facing a potential economic crisis. Ajmal Ahmadi told Bloomberg that the new government could turn to other countries for financing.
They're going to have to find additional revenue sources, or wherever that may be. They'll probably try to go out to other countries to replace the U.S. and maybe China, Pakistan, or other regional countries to find some sources of financing.
So what, if any, are the implications of the Taliban victory over the world's most powerful military and the largest economy on the U.S. dollar and dominant role of global currency? Well, to answer this and more, we're joined by Jim O'Neill, economist, a senior advisor at Chatham House and former UK commercial secretary to the Treasury. He has just penned an article on this topic for Project Syndicate. Jim, thank you so much for joining us. I mean, you had a beautiful piece actually laying out, I guess, what Afghanistan shows the world that the U.S. could do. You link it to the dollar, and of course you talk about Bretton Woods. Underlying all of this is, I guess, the future of the dollar.
Good morning, Francine. Yeah, it's obviously a big moment in at least the geopolitics of these issues, and many people's instincts, and some of mine would be to think, well, this has got to be bad news for the dollar, but all you need to do is spend half an hour reflecting on the original Afghan invasion 20 years ago, Iraq, and many others. And of course, the dollar has not only survived easily all of those episodes, throughout many of them, the initial instinct of the dollar was to rise as sort of a bit of a mini sort of safe haven kind of thing comes into existence. And it obviously, nothing ever takes place in a vacuum because there's other things going on, but that seems so far to have what's happened again in this case.
Jim, do you think King Dollar will really be challenged in the next 5 years?
So the other thing that I touch on in that piece, which is it's very interesting that I don't hear or read anybody talking about it, but I think I'm right in saying, Fran, you get your colleagues to check this out, because it wouldn't be the first time I'm wrong about something, but I think I'm right in saying that this month the IMF will publish its 5-year review of the components of the SDR baskets. And one would imagine, although that's a bit dangerous to say by normal circumstances, that the RMB weight in the SDR basket might rise again. And contrary to what I just said, if that were the case, that would serve to remind people that as we creep through time, on an objective representation of the importance of currencies linked to their economies and trade, the RMB is picking up pace despite its apparent loss of interest in markets the past couple of years, and of course with what China's doing. So I think that will be very interesting to see, actually. And as I say, I'm surprised there's not any chatter in the markets about it. Maybe there is, and I've just not noticed it.
Yeah, I mean, is there a worry, actually, Jim, that markets are too short-termist? So, you know, some of these longer-term implication for foreign... Never. Markets short-termist? How dare you say that? But is it, you know, more short-term than it was 2-3 years ago?
You know, it does... I mean, you know, obviously these days I am a bit removed from the hurly-burly of day-to-day markets compared to much of my professional life. And it actually does often seem to me from where I sit that markets seem remarkably focused on such short-term events and sometimes don't really have a lot of perspective. I quickly add in saying that, having learnt my spurs in the foreign exchange market, the foreign exchange market is the greatest fruit and vegetable stall in the world, and it has this uncanny ability to absorbing and digesting everything that everybody knows very quickly. So foreign exchange market's probably pretty good compared with virtually any market in having a reasonable reflection of a price about what everybody's thinking about. So we'll see. But obviously the other thing, we've got Jackson Hole, even though I think it's now going to be virtual. And what the Fed has to say about tapering, I would imagine, is obviously going to be pretty relevant for the performance of the dollar and broader markets as well.
Yeah, and we were looking at, you know, the spread between the people that actually think that markets or the S&P 500 goes up and the ones that think it goes down. And the divergence is actually absolutely incredible. It's a little bit like the divergence on Treasury calls. Jim, I mean, what does that point to?
I heard you say that and sort of found it interesting. It's not surprising in a way. I mean, if you think that historically late August through early October have often been some of the most chaotic markets in repeatedly over the years, certainly over my near 40 years, we have got lots of things that we even know about that could cause that again this September and October. So, you know, whether it's from Taliban-controlled Afghanistan getting out of complete control and mayhem, the Fed deciding to taper more aggressively, Delta variant getting, you know, there's all sorts of things that can cause a lot of turmoil just amongst what we know. And then actually, as the Afghanistan thing has reminded us about, there could be something completely unknown suddenly appears on top of all of this cocktail too. So I wouldn't be in the slightest bit surprised myself if we had a pretty volatile few weeks coming up.
Jim, do you believe that, you know, a policy mistake, the worst policy mistake, would actually the Fed and other central banks not acting quickly enough on inflation?
Actually, slightly the other way. I think it's, you know, linked to what I just said. The Fed's got, as often, a very tricky environment. Some of the issues that people have talked about so much in recent weeks about inflation have obviously got some basis, but at the same time, it seems to me longer-term measures of inflation expectations, as you and I discussed before, particularly the University of Michigan one as it relates to the states, are all, you know, seem quite stable to me. And if we're going to see more evidence of the world economy slowing down again, because we've certainly seen that during this month, it might well be that the inflation fears yet again turn out to be overstated. So if I were a voting member of the Fed, I'd be trying to look through this for the foreseeable future, and particularly with the spread of the Delta variant, wanting to make sure that this thing isn't yet again going to cause fresh destruction for economic developments in so many parts of the world.
Jim, thank you so much. I thought of you over the weekend, Jim, actually. I went to a football match, learned loads of new swear words. We'll talk about football as well.
What game was it you went to?
Fulham Hull. It was a friendly game. Jim O'Neill stays with us. We'll talk a lot more about China and emerging markets and maybe football as well, because we just can't stay away from football. Coming up, President Xi lays out a warning for China's rich. Rhetoric from Beijing points to a campaign to close the nation's massive wealth gap. We'll discuss China next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the Chinese President Xi Jinping has laid out a warning for a country's rich. His rhetoric about common prosperity has surged this year, evidence of the Communist Party's commitment to closing China's widening wealth gap. Bloomberg's chief Asia economics correspondent, Enda Kern, now joins us from Hong Kong. So, Enda, good morning to you. What's the significance of the use of common prosperity?
Well, good morning, Francine. It does appear to be emerging now as something that we do need to keep a closer eye on. This phrase, common prosperity, only appeared sporadically in President Xi's speeches early on, but in the past year it has appeared 65 times compared to 30 times in the year before that. My colleagues in Beijing have worked out. So it does show you that we are getting something of a new signal now from the central government in terms of where their priorities are. And this idea of common prosperity goes to the core of more equality for all, tackling the high earners, not just the ultra rich, but those who are also the high earners too. And it does seem as though the government is determined now to send a signal that they are about, leveling up the society, for want of a better word, and that there will be some policy changes coming down the tracks.
So, what kind of policy options are the government actually looking at, Enda?
Well, it's early stages. We're getting the signals on this, in recent weeks. But the idea seems to be, on the one hand, there's a discussion around philanthropy, which means big companies will need to start donating more money to the causes that the government think they should be putting money into. And on the other side of the ledger, of course, there's going to be some discussion around tax. We've had some signals coming from the party that tax will be on the agenda, and we know also that the state press are making this point as well, that people are going to have to be aware that change is coming, and that those high earners are going to have to be willing to share a little bit of their dues. So, as I say, we don't have policy specifics yet, but all the indications are that there will be some measures, and those measures will focus on tax and philanthropy, Francine.
Thank you so much, Bloomberg's Enda Kern there with the very latest on China. Now let's get back to Jim O'Neill. Jim, we were talking a little bit about China, with Enda and trying to really figure out what comes next in terms of regulation. Now, this is nothing new, right? They've wanted a fairer society for a long time. Maybe they were sidetracked by the trade war with the U.S., but is that a good way, a good prism of looking China? I mean, you coined the BRICS. What's next?
I don't, I'm watching it with great interest and trying to read about it as much as I can. I'm a bit concerned about whether the Chinese machine has balanced its judgment of the timing of this. And obviously, one can get, given what they are, why they at some point they have to do something about narrowing the income and wealth gap. But at the same time as when there's so many other issues swirling, particularly, going back to what we talked about before in terms of big picture and longer term, we've entered the time where China's labor force is peaking. And so that some of the forces that drive underlying long-term growth for China aren't anything like as favorable as they were. And coming on top of when there's such a battle about aspects of global trade involving China, where's their productivity going to come from if they're going to keep on clamping down on a variety of different sectors, whether it's linked to a genuine desire to narrow the wealth gap or not? And so, I'm a bit concerned that they might not handle this correctly. Now, I quickly add in saying that, when others have worried about things the Chinese are doing the past 30 years, they've always been wrong. The Chinese seemingly get it right. But this is a more tricky time for them to do these things than, in my view, than it's been in any of the past, certainly 20 years of BRICS and probably earlier. So it's going to be fascinating to watch. And as we can see, not surprisingly, the markets are very focused on it.
Do you think, Jim, this is a concern for,
and
it is important, but is this a concern for international investors, or is this a concern actually for the Chinese economy?
Both. Linked to the whole BRIC thing, still amazingly so few people seem to really get it, but what happens to the Chinese economy at the margin is the single most important thing in the world economy, whether you are directly invested in China or not. China has marginally added more to global growth than the United States in the past 2 decades. And if China screws things up and the economy slows sharply and more, even worse than that, if it were to be in a disruptive way, it would be really bad for the world economy, for everyone. And so obviously for the markets, it's really important.
Jim, we have a viewer question, actually, which is interesting, which is kind of foreign affairs, but also linking it back to the economy.
Yeah.
So this person writes in, what's Jim's view of the impact of Afghanistan on Taiwan security, either physical or economic security?
Right. I mean, I sort of share what I think is the sort of general quick view about all of this, that if you look at the style in which the US appears to have just disappeared from a leadership role in Afghanistan, I can't imagine the likes of China are going to be overly worried about, a lot of the rhetoric that the US says about Taiwan. Because when it comes to it, we're going. What's really driven Biden, it seems to me, is the domestic politics in the United States, and the domestic appetite in the U.S., rightly or wrongly, for this never-ending U.S. engagement in deep, distant places in the world has gone down a lot. And so, whilst to the international elite involved in these issues in the U.S., Taiwan obviously represents a massive issue. For most American people, they probably couldn't care less. So the idea that the US would do something really substantial to defend Taiwan, I always found it a bit hard to believe, and certainly I think the evidence after Afghanistan is that others will as well. And as we all know, or certainly people who followed China a long time, you know, the Taiwan issue is something that the Chinese leadership, rightly or wrongly, regards as a domestic issue because it relates to their own history. And you know, they would, if it came to it, the Chinese would be prepared to do a lot of things to support what they think is theirs. And I can't see the commitment from the US being that strong when it really came to it. Although obviously, in the global geopolitics of it, the US rhetoric on Taiwan will remain very, very strong.
Jim, thank you so much. We haven't even talked about football. Are you planning to go to any stadiums anytime, Jim? Maybe
if Manchester United play as abysmally as they did yesterday, I might not go ever again. We're supposed to be a good team these days, but yesterday was pretty dire.
Yeah, but I won't believe that, Jim. If I believe that,
leaving at that from maybe.
I'll believe anything, which I don't. Yeah. Jim, thank you so much. Jim O'Neill there from Chatham House. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bloomberg has learned that Janet Yellen has told senior White House advisors that she supports reappointing Jerome Powell as Federal Reserve Chair. The White House has been casting a wide net for possible candidates, with Powell's 4-year term set to end in February. The U.S. Treasury Secretary's backing would greatly increase Powell's chance of reappointment. Now, shares in China Evergrande have fallen on a report that it may sell its Hong Kong headquarters building at a loss. Singtao Daily reports a debt-laden developer could get 10.5 billion Hong Kong dollars for the office tower, less than the 12.5 billion it did buy it for back in 2015. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, coming up, Bitcoin briefly tops the $50,000 level for the first time since May, and it recovers from a disorderly rout just 3 months ago. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture for the markets on this Monday morning. Stocks in Europe rising, U.S. futures also on the up. Traders taking advantage of last week's sell-off while keeping a wary eye on risks from the Delta variant strain and China's regulatory crackdown. I'm looking at also bonds. They're declining. Now, some of the recent weakness in commodities, for example, abated. Oil pushing past $63 a barrel. Some of the commodity-linked currencies like the Australian dollar also strengthened. And Bitcoin, the big story today, we're going to have an update shortly, I think, with one of our reporters on Bitcoin retaking $50,000 for the first time since mid-May. Now, it's very interesting to see that, some of the things out there. The Dallas Fed president, for example, Robert Kaplan, says he's open to adjusting his view that the Fed should start tapering its asset purchase program sooner rather than later if the Delta strain persists and hurts economic progress. Treasury Secretary Janet Yellen also, in a Bloomberg scoop, actually endorsed Jay Powell for a second term as Fed chair, a move that could reduce uncertainty about the path for monetary policy. Now, joining us to talk about cryptocurrency and to talk about Bitcoin is Joanna Ossinger. Joanna, thank you so much for joining us. So if you look at Bitcoin back above 50,000, I mean, the rally was actually, pretty extraordinary, or it happened quite fast. So what brought it back up? I don't know if we do have Joanna on the phone. We may have Joanna, we may not have Joanna. Maybe we have Joanna, but she's on mute. It's a very 2021 thing to say. Look, on the virus front, China also squelched some local COVID cases down to zero. And then we're looking at Australia and New Zealand reviewing some of their strategies by eliminating infections. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Actually, he's off today, so it will be Lisa Abramovitz and Kelly Lyons out of New York. Both of them join me shortly. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空间之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station. China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
The skill set that a CEO really needs to be successful in today's environment?
So I think a good leader needs fundamentally good character and, frankly, perseverance. You just have to never stop.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Delta is the ace card that Jay Powell can pull out of his sleeve if he wants to slow up his committee.
The COVID-19 Delta flare-up maybe wasn't in the same place. So they sounded like Chuck Norris back then, but today, I don't think they're going to strike the same tone in Jackson Hole.
I don't expect the Fed to taper this year that many people are thinking, and B, even if they do, I don't think that would be bad for the market.
This is Bloomberg Surveillance, early edition with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, and 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, August 23rd. Our top stories today. Looking for clarity from Wall Street? Well, the experts are just as baffled about the markets as they were last year. This week's Jackson Hole Symposium may provide guidance. Here comes Bitcoin. The largest cryptocurrency is back over 50,000 after a 72% rally since last month. And a crucial test for President Biden's economic agenda. He's counting on Nancy Pelosi to keep House Democrats in lockstep this week. Meanwhile, the president's still dealing with the fallout from Afghanistan. Well, good morning, everyone, or good afternoon, depending on where you are in the world. I'm Francine Lacqua here in London. Kaylee Lyons and Lisa Abramovitz in New York. Matt Miller is actually off today. Kaylee, we look at the markets a little bit supported, but we could see choppiness just because of the divergence of views on what happens next to the S&P 500.
Yeah, and of course, we're all waiting and watching for Jackson Hole later on this week, Francine. But even ahead of that, we did see a pretty strong rebound in the Asian session. Equities really higher across the board, green all across the screen on Map Markets Go. Your outperformance coming from Japan with the Nikkei up about 1.8%, but stocks were higher in China and Hong Kong. And specifically, Chinese tech stocks finally getting some relief. The Hang Seng Tech Index hit a record low on Friday amid fears around regulatory crackdowns, and yet it rebounded about 2% today. Yes, those fears haven't necessarily gone away, but maybe just some buying of the dip is taking shape. We also got economic data out of South Korea overnight. Strong exports, that gave a lift to the Kospi and also a lift to the South Korean won, the biggest outperformer in Asian FX, stronger against the US dollar by about 0.5%, bouncing off of an 11-month low. Also in FX, you're seeing some strength in the commodity currencies, including the Aussie dollar, which is stronger against the greenback by about 0.5%.
All right, Kaylee.
As for what the picture looks like in Europe, Lisa, really quickly, I just want to run you through it. There's a lot of green on the continent as well. Stocks are higher, really across the board. The DAX up 1/10, and then your outperformance actually is coming from the CAC 40 in Paris, higher by about 0.6%. And overall, the Stock 600 higher now by about 0.3. One individual equity story I did want to point to is Sainsbury, of course, the UK grocer. It is up about 11, nearly 12% on reports that a private equity firm, Apollo, is looking at a takeover bid for that company. And then finally, the euro is stronger against the dollar by about 0.25%. Broadly, it is a story of dollar weakness today. And then also a lift in the commodity complex. Brent crude up about 3% after its worst week since October. It's trading at 67.35, Lisa.
All right. Well, I jumped the gun because I'm just so excited that everybody's back buying the dip today, because that seems to be the mood on the street after last week's dip, if you can call it even a dip. People are coming back in. There's a risk on tone. You can blame it or attribute it to whatever you want, but the bottom line is you can't can't keep a market down with a Fed that is going to remain dovish. And yes, the Jackson Hole Symposium, I don't know if we can call it that anymore, considering the fact that it's now virtual, is going to probably come out and reiterate comments that we heard last week, that people are getting more concerned about the Delta variant. The S&P now up about 0.25%, the 10-year yield a little bit higher, but again, well off the 1.6% levels that we saw back in early June at 1.27%. The dollar weakness, as Kaylee was saying, across the board. And crude, really interesting to get this lift. We saw Goldman Sachs come out and say that they thought that it was oversold because the Delta variant is transitory, if we want to bring that word back. Let's resurrect it, Fran.
Yeah, let's do that, Lisa. I also love the fact it is a virtual symposium, or we can call it the silent disco at Jackson Hole. Now let's take a look at what else is ahead today. Yeah, the U.S. House returns to Washington today for a vote on the Senate's budget resolution. Tomorrow, Kamala Harris arrives in Vietnam, becoming the first U.S. vice president to visit since 1975. On Thursday, the Fed officials meet virtually for the annual Jackson Hole Economic Policy Symposium. That's what Lisa was talking about. And then we'll get July U.S. personal income and spending data on Friday. So it's all about Jackson Hole. And, of course, that nice Bloomberg scoop, Kaylee, that Janet Yellen is also for keeping Jay Powell for the moment, which actually means that we could have a bit more continuity on monetary policy.
Yeah, which could be a good thing for investors. And let's get more on investor expectations ahead of Thursday's Jackson Hole meeting. Let's bring in now Bloomberg's Kriti Gupta. So, Kriti, how exactly is the market positioned ahead of the event?
Well, Kaylee, everything has to do with the market action you saw last week. We've really had this kind of risk-off week, but it was really about the FOMC minutes. We know we've been hearing from several Fed officials for months now that they are starting to look for tapering, especially going into the end of this year, perhaps in just a couple of months by the end of December. That confirmation showed up in the FOMC minutes last Wednesday. So you did see that dip for about 3 days in a row, but compare this to the 2013 taper tantrum you saw with Chairman Bernanke, and this was not the same reaction. So at first, people are thinking, well, hold on a second, maybe the market isn't that sensitive to tapering, but then fast forward to Friday, and immediately you saw that buy the dip mentality when I should say Dallas Fed President Kaplan came out and actually said, we should be looking at potentially the Delta variant in terms of the tapering timeline, because that could really change just how quickly we want to scale back those bond purchases. Now, Kaylee, this is significant simply because Kaplan was one of the first people to come out and say that he is actually in favor of tapering and starting off that process of cutting back the Fed support. So a little bit of a mixed market reaction. Looks like a little bit muted to the downside, but the upside surprise when it comes to that Fed support, well, it's no secret that that's what is supported markets on Friday and, of course, futures this morning as well.
Can you give us a sense, Kriti, of what tapering means in light of what we're experiencing with respect to the Delta variant? I mean, honestly, it seems like that slows the economy. The taper response might be slightly different than otherwise.
It absolutely is. And, you know, what's important here is that when you start to look at the Fed's balance sheet and you look at the S&P 500, for example, they basically track each other. So it's no secret here that the market is a little bit addicted to the Fed support. I mean, it's no secret. But you're actually seeing this in the charting itself. The question here is how much further can it go when a lot of this kind of downside surprise is arguably baked into the market. And that's really what you're going to see with Jackson Hole. A lot of investors saying, well, the surprise for Jackson Hole was in the rear view mirror. Some traders I spoke to even saying they're taking this week off because they don't even expect anything to happen. Like you guys said in the intro, the big surprise here was Janet Yellen giving his support to Chairman Powell.
There you go. August, beach week. Everybody just go to the beach and forget the markets. Kriti, thanks so much, Kriti Gupta. Now, commodity markets are set for a high-stakes week. The Jackson Hole meeting will be a spotlight as tapering concerns oil prices. Joining us now is Bloomberg's Manus Kranian. Manus, we've seen a lot of commodity prices and stocks that go with it really whipsawed.
Yeah, I mean, look, the commodities came under incredible pressure last week. There's a word in my inbox, Francine. It's existential angst. And really last week saw repricing in the dollar at a multi-month high. That impacted the commodity. The Bloomberg Commodity Index rolled over and rolled down. The big protagonists within that commodity complex are, of course, oil, which is 15% of the BCOM. Gold and copper. Iron ore had its own moment in the sun. But I think what you've moved from here is the two E's. Existential angst last week was reprice the dollar, reprice commodities and equities, through to an excuse, which is the Kaplan lines. He wants agility, open-mindedness, and he wants to avoid rigidity. That opens a more nuanced taper. That has a consequence for the dollar, and that has a symbiotic relationship with where the commodity complex goes. You've got the worst month since COVID began on the commodity complex. The question now is whether you're putting in a floor in China and whether the dollar will continue to roll over and a more nuanced taper could come into play. Fran?
Well, Manus, you're talking about commodities and currencies there, and maybe Bitcoin is a little bit of both. I don't really know what we call it at this point, but it's back above 50,000. What's driving it?
I suppose a relief, a sense of relief. You know, if you think of all the analyst notes, it was $20,000 and we're going to have a major implosion. Michael Burry talking about an implosion the size of economies. Here you are. Fibonacci. We like a bit of Fibonacci. 61.8% retracement takes you back to $51,000 from the highs to the lows. So we are back on a technical retracement towards that level. The record high was $65,000. So you are just seeing a renaissance in terms of risk taking and a steadying in the market. So what you have here is a rapid repricing in Bitcoin for any number of reasons, but you will start to see the buy notes come flooding through your inbox talking about $100,000 again. Just wait for Lord Elon to proclaim. I'm sure we can rustle up a bit of vol on Bitcoin when he does.
Thank you so much. Bloomberg's Manus Cranny to predict the volatility ahead in Bitcoin. Over in Washington, D.C., President Biden yesterday saying that the U.S. had expanded its evacuation efforts beyond the perimeter of the Kabul airport. It is working hard to get people out. Take a listen.
Let me be clear. The evacuation of thousands of people from Kabul is going to be hard and painful, no matter when it started, when we began. It would have been true if we had started a month ago or a month from now. There is no way to evacuate this many people without pain and loss of heartbreaking images you see on television. It's just a fact.
And Marie Hordern also waking up early with us, Bloomberg Washington correspondent joining from our D.C. bureau. Anne Marie, can you give us a sense of the response to the pushback that President Biden has given in terms of what the U.S. role has been, the timetable, and how this evacuation has proceeded?
Well, there's a lot of question marks regarding the timetable exactly. The president kind of left open the August 31st deadline. And we know that tomorrow, UK Prime Minister Boris Johnson, when he convenes the virtual G7, this is something he's going to be pushing forward. We should note that just in the last few minutes, the Times of London is reporting that the Taliban does not agree and will not sign up for an extension of that August 31st deadline. So this is where things could get potentially tricky. The president's speech, the other thing to note that is of importance is that he did say the U.S. is expanding these efforts to help evacuate Americans that cannot get to the airport, but he wouldn't give the tactical changes and the reasoning exactly behind this because of security reasons. But there are reports that the likes of the ambassador of Qatar is going with Americans and actually escorting them to the airport to make sure they can get there to safety. So as the president said, it is a very tricky and dangerous operation, but we do know that they are expanding that operation outside the airport, and we do know that at the moment that August 31st deadline does remain a little bit elusive.
While we're talking about deadlines and timelines, Anne Marie, we also have the House taking a small break from their recess today, coming back to Capitol Hill to take steps forward on President Biden's economic agenda. What takes place today and through the remainder of the week?
Well, Speaker Pelosi wants to get through 3 agenda items. One is the voting rights legislation. One is the framework for the $3.5 trillion budget resolution. And finally, the bipartisan infrastructure agreement. Now, she wants to put them all through procedurally, but the only two that would get the actual vote would be the resolution as well as the voting rights. Now, this is set up for a very delicate balancing act. Already late last night, you had 9 moderate Democrats penning a letter all together in the Washington Post, an opinion piece saying the time to act on infrastructure is now, and we should not be holding it hostage. It remains to be seen if these 9 moderates are willing to tank the budget resolution if they don't get their bipartisan infrastructure. But tomorrow will be key votes.
All right, Anne Marie Hordern in Washington, thank you so much. And I do want to take a quick check now on some stocks moving in pre-market trading here in the U.S. One of them moving to the upside is Pfizer, of course, the COVID-19 vaccine maker. Currently, that vaccine only has emergency use authorization, but we're expecting the FDA to grant it full approval as early as today. And as a result, those shares up about 3% before the bell. To the downside, though, one stock is Uber. You had a judge in California striking down a voter-approved ballot measure, Proposition 22, which allowed companies to classify their drivers as independent contractors. That getting struck down, not necessarily a good thing for the likes of Uber and Lyft, and as a result, those shares down the better part of 4% before the bell. And another stock moving to the downside is GM. We got news after the bell on Friday that it's recalling all remaining 2019 Chevy Bolt EVs, as well as all models 2020 to 2022 because of a battery defect. That is dragging on that stock down a little more than 2% in early hours, Francine.
Yeah, we'll look at General Motors. We also have a great note by Alberto Gallo calling it the last dance in Paradise City. And the way he says it, Kaylee, is everything in life is transitory. Duration, however, is what matters. So we'll be speaking to Alberto Gallo, Algebrie's head of macro strategies. And then a little bit later, we talk COVID with Andrew Pekosh, John Hopkins, a Bloomberg School of Public Health professor and virologist. This is Bloomberg.
has been looking at West Palm. They have been looking at outside of New York for offices. How are you thinking about your footprint as people return to the office and want to work from different places?
Yeah, so it's the new Apollo. I think flexibility is the name of the game. When it comes for us in our business, I think that we've really preached the mantra of flexibility. I think we've proven throughout COVID that we could be highly effective. In fact, if you look at the bottom line, I think more effective than we've ever been in our history through a flexible work environment. So as we head back for the fall, we've really preached to all of our businesses to lean in and embrace this flexibility and go where the market goes. We're in a competitive industry. Our portfolio companies are in a very competitive labor environment. And I think businesses that just want to go back to the way things were are missing a huge opportunity to learn from what's gone on over the last 18 months.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Lisa Abramowitz in New York and Francine Lacqua in London. Matt Miller is off today. Well, guys, there was a great story out on the Bloomberg terminal over the weekend about just how divided and unsure Wall Street strategists are as to where the S&P 500 is going to end the year. Of course, the index has already rallied about 19% on a year-to-date basis, up to around 44, 41. That already is above the average year-end target on the street. The average target is 43.35, so a little bit lower than where we were as of Friday's close. But the most bullish target is all the way up at 4,700. And our listeners on London DAB Digital, I know you can't see this chart, but that basically is just above where we are now and is very much above the lowest, most bearish target on the street, which is all the way down at 3,800. The gap between those two is 24%, and that is the widest, or the third widest, in about a decade, Francine.
I mean, that's quite a long time. And Marcus Ashworth was like a baby in nappies 10 years ago. He joins us now. He's a Bloomberg opinion columnist, also looking dapper for a Monday morning in a full suit and tie. If you look at Kaylee's chart, and it's a fantastic chart, we've seen it for a while. It's basically the markets are unsure about how they should look at the data. They're looking at the same data points. How difficult is it to make a call on whether it goes up or down?
Well, it's quite clear the Federal Reserve doesn't know what to do, and they'll be struggling this week in Jackson Hole. So all of these things are up in the air at the moment. There's certainly the Delta variant is making it very, very difficult, almost impossible to know whether or not there will be renewed growth. Personally, I think it's paradise postponed, not paradise lost. But we saw that down revision from Goldman Sachs, quite a savage down revision for this quarter. Things are getting hit. Global growth, you can just look at industrial commodities off sharply. There are clearly things which are struggling with us. However, we're going to hit the plateau, aren't we?
We
hope. Yeah, we hope.
Well, Marcus, of course, we're awaiting any kind of clues we may get from Fed Chairman Jerome Powell later on this week. Do we have any clues as to what the taper tantrum could look like this time around?
Well, I think they absolutely do not want. They have waking nightmares about what happened in 2013. There's no way they want to have that happen again. So I think personally, fascinating that it may be a virtual symposium with no foreign central bankers of any note there either. I think this is a pass this week. We might get some more information about what they really think about underemployment, what do they think about things like growth prospects, but really I think we'll pass through to September 22nd FOMC and maybe even November 1 with regards to actual tapering. However, they've got to sort of lay out some form of schedule on what they think, whether or not they'll keep the balance between, say, 80 billion per month of buying of treasuries and 40 billion of mortgage-backed securities. Personally, I think mortgage-backed security buying is crackers at the moment. Why do that?
Marcus, I think a lot of people have actually expressed similar sentiment, perhaps using different words depending on their location. I wonder if there's a message on a broader level. If you take a look at last week's entire 0.6 of a percentage point dip in the S&P and the fact that that is a buying opportunity for so many individuals, as you see this morning in the action, what is the message, if anything, from that?
I'm not sure there's anything. It's a summer month. The fact that the S&P doesn't really want to dip, I suppose, must tell you all, which is the simple message it has been for so long. Equities are the only answer. With bond yields down so low, there's no value there whatsoever in bond markets. Commodities are struggling a bit at the moment. Equities still remain the only game in town, and probably if the Fed carries on dithering over whether it's going to taper or not, they are absolutely set fair, I think.
Did you actually say it's crackers? I love
it's crackers. I was thinking of another word, but I thought we're probably safer to go with bonkers was really what I wanted to say.
Yeah, okay. I mean, it's bonkers. I guess the problem is that there's a lot of cash out there, right? So it depends on whether equities or some of these companies distribute dividends or not.
Yeah, I mean, there's so much money out there. That's why you can see bond yields so low. You can see the fact that the money keeps on going into equities. So yeah, I still think the balance is set fair for equities and dividend yields. And look, the earnings season was fantastic. So the economy is going well. And there's a lot of cash spending. If you look at the fiscal numbers throughout most of the economies, particularly UK as well as Europe, the fiscal numbers are holding up. Well, forget retail sales. That's not telling you people are actually spending.
Yeah,
still.
It's just the Delta and then the crackdown in China. We should do like a pros and cons, and every day there's one that goes from one list of pros to cons. Marcus Ashworth there of Bloomberg Opinion joining us this morning. Now, coming up, the former New York Fed president and Bloomberg Opinion columnist, Bill Dudley. That's at 7:30 a.m. in New York, 12:30 p.m. in London, and this is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. and that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market?
There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Lisa Abramowitz in New York and Francine Lacqua in London. Now let's get the first word news. And tropical storm, no longer a Hurricane Henri, soaked the U.S. Northeast with rain after coming ashore in Rhode Island. The storm left a trail of power outages from New Jersey to Massachusetts, and about 1,000 flights were canceled. Plus, Amtrak had to cancel trains between New York and Boston. In Germany, Chancellor Angela Merkel is threatening to push for more sanctions against Russia if the Kremlin tries to use that new Nord Stream 2 gas pipeline as a weapon. Russia's President Vladimir Putin has raised the stakes in mounting tension over energy. He imposed conditions on an extension of gas transit agreement with Ukraine, which is an economic lifeline for the former Soviet republic. Vice President Kamala Harris is in Singapore, where she announced a new supply chain initiative. She and Singapore's Prime Minister also announced agreements on cybersecurity and climate. The two countries want to deepen their economic ties, but the talks today did not cover new trade agreements. And Disney says it has taken $125 million in online revenue from Black Widow. The movie has prompted a lawsuit from its star, Scarlett Johansson. She says she has been cheated out of money she is due because Disney released the film both in theaters and online. Johansson said her compensation was heavily dependent on theater ticket sales. Disney says she was paid $20 million and is willing to include online sales in calculating her bonuses. I have to say, Francine, I have not yet seen that movie online or in theaters.
No, me neither. And, the question is actually, what does this lawsuit mean for other COVID-era movies? The million-dollar question is, when is James Bond out? We've been waiting for James Bond for like 2 years. It feels like a decade. It's time for it to come out now.
Well, we actually watched Casino Royale just to get the spirit, to try to get it going over the weekend. And then we played poker.
Yeah, it'll probably be delayed again. You have to watch Casino Royale 3 more times. Coming up, he's James Bond of the markets, Alberto Gallo. This is Bloomberg.
industry is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, this is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London, Kelly Lyons and Lisa Abramovitz in New York. Well, Matt Miller off today. Now, we're looking at the markets. Lisa, I was excited about your upcoming trip to Jackson Hole, but actually they're cutting it way back, and most of it is virtual now.
Yeah, we're not going to Jackson Hole, we're going to Zoomlandia. I mean, that's essentially what we're doing right now. I'm wondering how much this is sending a message, Fran, given the fact that we are seeing increasing concerns about the Delta variant and what that could do to both the labor market as well as just growth in general. I mean, we've got the Labor Secretary of the United States worrying about the potential ramifications on the jobs market in the United States. You wonder if basically the Fed is saying, don't expect anything. We're going to even be on Zoom. Hell, why are we even going to attend?
Yeah, and actually, I see more and more market commentary on that, right? It's maybe not the right moment to give us any kind of indication of what happens next. And we're expecting, I think, Joe Biden in September to give us clues on whether he's keeping Jay Powell in the first place. Kaylee, how's it all playing out in the markets?
Well, we're all waiting for virtual Jackson Hole, if you can even call it Jackson Hole, but that is leaving us in positive territory on this Monday morning. Of course, it was a really strong session in Asia, and you are seeing some follow-through risk-on sentiment in Europe and the U.S. Right now, the Stock 600 is off of its opening highs, but still up about 1/3%, and S&P 500 futures are also higher by about 0.2% In the bond market, you also are seeing yields ticking up. We're up about 2 basis points on the 10-year to just shy of 128. And then in other assets, I have to point to Bitcoin back above $50,000 for the first time since May. And that, of course, is lifting some crypto-related equities in pre-market trading, the likes of Bit Digital, Riot Blockchain, each up about 7% or so. Two movers to the downside, though, Uber, Lyft, you can throw DoorDash in here as well. A judge in California knocking down a voter-approved ballot measure that would allow these companies to classify their drivers as contractors. The judge saying that actually is unconstitutional, and as a result, those shares are getting way down. They're each down about 4% before the bell, Francine.
Yeah, some of the interesting, really, market movers, Uber, and we saw also a read across here in Europe. Now, we're joined by Alberto Gallo, head of macro strategies and portfolio manager for global credit opportunities at Algebris. I like your title, Alberto. Where do you see the biggest opportunities 3 days before Jackson Hole?
Good morning, Francine. So the Jackson Hole Symposium is going to be very quiet in our view. The market is stuck in a narrative where there's a lot of worry about imminent tapering. But given the last events that we've seen in China, we could see the Fed delaying the tapering announcement probably towards November. So I wouldn't say it's an imminent risk. The major issue here is, however, that China will continue its crackdown on the private sector. And we've seen recently that they have talked about cross-cyclical strategy, which means essentially we don't care about the cycle, we're going to focus on the long run. And they'll keep hitting the private sector.
Look, what I liked about in your note is that, of course, you explain very nicely that, some inflation drivers are, of course, transitory, others aren't, but you believe that inflation at the end of the day is a political decision.
It is, and Milton Friedman used to say there's nothing more permanent than a temporary government program. So a lot of the spending that we are seeing is because economies have become deeply unequal. If you look at the Google search on books and magazines over the last 100 years, this is the first time that the word inequality is searched more times than earnings or revenues. This never happened, over the last century. There is a key development, which is that the median voter is going to become a millennial in the coming 10 years, and that's both, in the U.S. and Europe. And millennials have been left out of the boom of the last 2 decades, which was an asset boom. It benefited more the baby boomers and people with assets. So now policies are shifting towards being more inclusive, looking at sustainability. Both across the US, Europe, and China, there's more care about the quality of growth rather than the number, the quantity of growth.
Alberto,
but we are seeing a very different approach between the US and China to solve the same problem.
We also, of course, are seeing a growth slowdown in China. There's concerns about the Delta variant and a reversion back to the before times of when we were more deeply in this pandemic. How defensive do you want to be here?
So there's three factors driving the market now. The first is monetary policy, which is going to become less expansionary, but it's not going to be a huge taper tantrum. It's very well telegraphed. The second one is the Delta variant. It is peaking in the US. We're probably at peak Delta fear. Every newspaper is titling, Delta and COVID are going to be here forever, but the numbers are showing an improvement. So we're positive on the Delta variant. That's very positive for the US and Europe. In Asia, governments will probably maintain a zero tolerance policy towards COVID. Finally, there's the Chinese policy against the private sector to reestablish control and improve sustainability. And I think that's going to stay. We're not going to see a lot of easing from China. So we're positive on the US and Europe. We think there's more risk on emerging markets in China. We're going to see more weakness. So on balance, obviously, you need to think about which assets offer value. There's not a lot of value today, but there is some value in equities, in convertibles, and selective in credit.
Does cash have value here, Alberto?
We want to be very liquid because China continuing its actions on the private sector can spill over, can create some volatility. We've seen the Asia high yield market, corporate bonds in Asia are 2 times as wide than other high yield markets, but gradually this potential credit crunch in Asia can spill over, and also obviously we have less easing. So we want to have liquidity to capture future opportunities. At the moment, we're invested with around 2/3 of our capacity, and we have room to add. We want to be the ones buying when there is a sell-off and when there is a tantrum potentially over the coming months.
Alberto, given the fact that you said that we're probably at peak Delta fear, I wonder if the prospects of an inflation overshoot have been raised dramatically because central bankers will hold on to their easy money policies for potentially longer, despite the fact that Delta is passing.
So, inflation is a very hard variable to predict. And at the core, we have the job market. In the UK, something very interesting is happening, which is that wages are rising. And in the UK, there's been a lack of supply of labor. People have left. In the US, we don't see that yet. However, we do see that there's an improvement in job creation as states take out their benefits. And also, in terms of goods inflation, we continue to see the bottlenecks to the supply chain persisting. And that's not going to change. China is going to try to play a long-term game against Taiwan. And companies will have to onshore production. Think about how many chip makers are building factories in the US, for example. So that's going to raise costs.
Yeah, Alberto, what needs to happen for assets to be repriced right now?
The equity market, and generally we could see more repricing if the Fed delays tapering. So we could see a continuation of this bull market. We're not chasing markets here because valuations are already high. But eventually, I would say that the biggest question that we are going to see is about inflation. If inflation proves to be more persistent, if these supply bottlenecks continue, which is also our view, later in the year or next year, we could see some other central banks withdrawing policy or needing to withdraw policy and a repricing. And also China is at the core of this. China has been tightening as all the other governments were easing.
Thank you so much, Alberto Gallo. We'll talk a lot more about China and also some of the regulatory concern. Alberto Gallo, head of macro strategies and portfolio manager for global credit opportunities at Algebris. Now, coming up, Andrew Pekash, Johns Hopkins Bloomberg School of Public Health professor and virologist. We'll talk booster shots and vaccines. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Lisa Abramowitz in New York and Francine Lacqua in London. Well, the Pfizer COVID vaccine is set to get full FDA approval this week, with the announcement expected to come either today or tomorrow. Shots, of course, have already been given based on emergency use authorization. Dr. Andrew Pekash, Johns Hopkins University Bloomberg School of Public Health professor and virologist, joins us now for more. What difference will full approval make tangibly?
Well, the data that is moving forward, the full approval, is data we've been well aware of for some time now. I think there is a perception out there, and in fact, many people that I've talked to have said the same thing, that full approval will make some individuals a little less hesitant to get the vaccine. So I'm hoping that that full approval comes with it a boost in the number of vaccinated people that will be here in the U.S. And again, what we see here in the U.S. will soon follow globally in other countries, because again, it's the same data that's going to get full approval in other countries as well. So I'm hopeful for a boost in the number of vaccinated people because of this full approval.
Andy, we were just speaking with Alberto Gallo, a fund manager, who said that we're probably at peak Delta concern. Is that appropriate given the trajectory of the cases, and how quickly will we see the caseload diminish?
Well, you know, it's really difficult to predict with, well, in any pandemic, but Delta in particular. You know, we're seeing very different trajectories of Delta in Israel, in the UK, here in the US. the cases are being driven by different conditions in those countries. So it's hard to make any sort of big conclusions or general conclusions about what's going on here. Certainly with Delta in the U.S., there's been signs that things are peaking, but they're peaking at levels that are much too high for medical infrastructure to handle here in the U.S. So I'm hopeful that over the next couple of weeks, we'll continue to see that downward trend, but not to be overly negative, the fall is going to bring us into conditions where virus spread is going to be even more likely. And so it'll be really important to see how things change right around that September time as well.
Andy, what comes after Delta?
You know, we're working hard to try to figure that out and see what's happening here. Delta is very different from the other variants that have come through. When I look at virus-infected cells here in the laboratory with Delta, I can immediately tell you which cells are infected with Delta and which are infected with other variants, because it's such a different virus in the way it behaves in the laboratory and as we see in the population. What we're really concerned about right now is Delta is spreading at such high levels. There's so many new mutations that are coming in Delta. We don't know yet if any of those are helping Delta or if many of them are just neutral mutations that aren't doing anything. So we're spending a lot of time looking at sequences, isolating viruses from people, and trying to understand if there's anything that's changing about Delta right now, given the large number of cases that are here in the U.S.
Andy, what do we misunderstand about vaccines? Or, you know, there are a lot of questions about why we're seeing so many breakthrough cases actually with people that have been double vaccinated. Is that what we should think about? And there's also this idea that we talk about booster shots, but here in the UK or other parts of the world, they say actually maybe it's easier if you get a mild version because then you get an automatic immune system.
Yeah, I think first and foremost, vaccines have to protect against severe disease, meaning hospitalization and death after COVID-19 infection. And the vaccines are still working against that to a very high degree. When it comes to protecting from symptomatic disease, again, these vaccines performed really well with variants that were much less aggressive than Delta. They're still performing well against Delta. So even though we talk about breakthrough cases, and I've got piles of plates here in my laboratory from individuals who are fully vaccinated that got Delta infections, we're studying those responses to see why those people might have been infected. But it's important to note that vaccinated people are still the minority of infections here in the U.S. and in most countries. So vaccination is working. With boosters, personally, I think we really want to keep an eye on the most vulnerable parts of the population, the elderly, immunocompromised, those with medical conditions that make them more predisposed to severe COVID-19. That's where boosters would certainly be considered. Whether boosters are needed across the country is another question altogether, and I think there is some difference of opinion in the scientific community about that.
Andy, should we also have vaccines for children under 12 years old?
Absolutely. I think that we'll see that safety data coming out there. We can assume that what we've seen in children between the ages of 12 and 17 is going to be similar for those younger children. There's some issues with the dosing and getting the dosing right, because younger children probably don't need anywhere close to the dose that an adult gets. So there's some things to work out there. But again, we want to get back to normalcy. Schools are going to be the important thing now that we see Delta can infect younger individuals and cause disease in those younger individuals. So vaccines for the youngest groups are something that's going to be very, very important, particularly when it comes to schools and educating.
Great. Andy, thank you so much for joining us. Andrew Pekosh there, Johns Hopkins University, Bloomberg School of Public Health professor and virologist, running us through some of the main and most pressing questions about COVID-19. Now, coming up, Bitcoin tops $50,000 for the first time since May. We'll get the latest on cryptocurrencies next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I've never seen this on a Monday. It's like Keene on Bitcoin. I'll wake up early for that.
Well, Bitcoin we can get to with a market with a nice lift and yields pulled back. Abramowitz called me at 1 a.m. and said, look at the real yield. And I said, I'm looking at it. But Bitcoin through to 50,000 or something. I thought of Scott Minerd making headlines ages ago with a ginormous number, but the chart's pretty well contained. I mean, I'm sorry, it is an elegant chart. And the simple truth is log Bitcoin, slope matters, extrapolates out. 100,000 Bitcoin in the spring of 2023 is where you get there.
Yeah, I mean, some of the other things I know you've been watching really closely is of course, inflation, the 2-10 spread and things like that, Tom. What are you expecting from Jackson Hole this week?
Well, it's a virtual Jackson Hole. We'll have to see what the papers say, but certainly it's all about the chairman's speech. I'm not surprised it was canceled. I'll be honest. I was talking about it Friday. There's been a real deterioration here in the Delta variant, and Francine, even though it's going to be virtual, I think it's still going to be a huge deal.
Yeah, it will be a huge deal. Also because we had the nice Bloomberg scoop out of D.C. that it looks like Janet Yellen actually would support Jay Powell to continue in his job, and that's supportive of a lot of asset classes.
Yeah, that made a splash this weekend. There's no question about it. But yeah. I do think that's going to come down to politics, and there's a few other distractions this morning, including Afghanistan.
Tom, thank you so much. We'll have plenty more, of course, with Tom Keene, co-anchor of Bloomberg Surveillance. Now, for more on Bitcoin, we're joined by Eddie van der Veld from our M-Live team. Eddie, when you look at some of the things on Bitcoin, I mean, it's incredible. We're talking about it this morning, right? $50,000, and it's really the rapid ascent of it.
Oh, yeah, absolutely. I think, and a lot of people didn't think that Bitcoin was going to bounce back this quickly. And Bitcoin is a classic Veblen good, where when prices go up, more people get excited about it, more is written about it, we talk about it on TV more, and more people get pulled in. And I think that gets just that self-perpetuation. I think we're seeing a little bit of that here. I think there's a lot of excitement coming into the Bitcoin market, and that's, pulling up the rest of the cryptocurrencies. So, I think there's a space to watch.
Because it's more legitimate, or does it so PayPal, right, basically said that it could offer crypto services here in the UK. Does that legitimize it, or is it just noise at the margin?
No, I think what it does is it creates an access point, right? And the more access points you get, the more people can get into this market and start buying Bitcoin, right? If in the olden days, it was really hard to buy Bitcoin. You had to send your money overseas. You had to, you had to trust somebody who, a company that you had no knowledge of. Now, if PayPal gets into this game, if we see a US ETF, that makes it possible for more investors to get in, and that, brings just more money into the space.
Do you think we're close? I mean, we spoke to, Jesse Powell of Kraken, we spoke to CZ of Binance, and we always ask about this ETF. Is it coming? And actually, what does that mean also for some of them, actually, what they, their platforms?
Such a good question, because I think this is one where you really need to look at what's happening. If we do see a US ETF, I think what we'll see is a cash-settled futures contract, right? An ETC, one that's backed by cash-settled futures. And that doesn't create new demand for Bitcoin. In the short term, it'll create excitement, and we'll see more people come in. In the long term, that actually takes demand away from actual, I want to say physical, but actual Bitcoin. So I think in the long term, it's more bearish than people think.
Do I talk about technicals, or do we not talk about technicals?
I mean, there's nothing else to look at. Maybe, you know, I think if you're going to look at technicals anywhere, you've got to look at it in the Bitcoin space, right? I think Bitcoin is driven by animal spirits more than anything else. So I think it matters. I think it matters that Bitcoin didn't collapse this time around. It shows us that there's fundamental support. But I think it, you know, ultimately, I think that chart, that logarithmic chart that Tom just showed us.
The elegant chart.
The elegant chart. It is an elegant chart. And I think what that chart also showed me is that the volatility of Bitcoin's dying down. And I think that matters a little bit. So yes, I think the technicals matter, and I think the technicals are supportive at this point.
So Eddie, you were way up front and looking at some of the commodity stocks, and actually, you know, commodities in general, also the read across on currencies. Like what's happening, is Jackson Hole going to move maybe, you know, currencies more or less in commodities?
I think commodities is really where it's going to be played out for the next few months. I think commodities are really at risk from Jackson Hole and from higher, you know, from higher rates and from a pushback on inflation. But I think there's another dynamic here, and we saw that today in the PMIs coming in. I think we're seeing that demand is shifting away from the goods industry to the services industry. I think people are going out, they're going to restaurants, they haven't got that much money to spend on physical goods anymore. And I think that takes the pressure off inflation as it comes via commodities, but it puts pressure on inflation as it comes via wages. So, you know, I think there's so much to talk about this week. I can't be more excited.
And maybe more China regulation.
Absolutely.
Eddie, thank you so much. Eddie van der Walt there from our Emmett Live team. Now, more Bloomberg surveillance is coming up. We'll hear from Bill Dudley, Bloomberg opinion columnist and former New York Fed president, amongst others. The markets, as Eddie was just saying, for the moment, there's a bid for the markets. There is also a little bit of a summer lull, so we have a couple of our great blogs actually working overtime to make sure that we understand all of the minutiae in the markets. Bloomberg surveillance up shortly. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg Bloomberg.com webinars.
The economy will continue to not boom, but be really quite expansive, quite strong.
It's all about that transition to higher quality growth.
I think we've got a reflationary backdrop still in place. I think it's reflation for longer.
We've already seen signs inflation is tapering down.
For the last year, it's always been employment, employment, employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast Bloomberg Radio and Bloomberg Television. And we say good Monday morning to you. Lisa Abramowitz is here. She is not virtual. No. Always virtual is Kaylee Lines in for John Farrow. Lisa, we're not going to Jackson Hole.
We're not. We can break the news here. If you were wondering, we are not going. They actually canceled it. So if we were going, we'd have a lot of questions being raised right now. This really is, though, a symbol of where we are in the economic recovery, Tom. And I think the fact that they shifted this to a virtual meeting rather than an in-person one shows how that we are retracing our steps when it comes to the pandemic, and the ramifications for the economy are significant.
We're going to get to the markets with a very nice lift this morning, a real adjustment in the real yield. But Lisa, all of the writing over the weekend led by Mohamed El-Erian in the Financial Times this morning. El-Erian demands that Powell regain the policy initiative.
Yeah, the idea here is going forward, how exactly are they going to face off with inflation and employment at a time of such incredible uncertainty when you have a Delta variant that is slowing growth now, but you have an economic recovery that does have steam on the other side of it. And honestly, if the balance of risks are looked at right now, Tom, is it more on an inflationary shift to the upside, or is it more on a dragged out recovery? And I do not know the answer to that, Tom.
Now, the inflationary lift to the upside, Kaylee Lines, you see it in yield. I mean, we're going to do a data check here, but you see yield really nicely get out to a higher yield. It seems like a more attractive inflationary morning.
Well, 127 on the 10-year, at least on the nominal yield, Tom. But to your point about the real yield, we're above negative 100 basis points, only negative 99 basis points, which feels in some ways remarkable. But to your point about inflation and the labor market, I really wonder if this Friday is the Friday we have to pay attention to when Fed Chairman Powell speaks, or if it's next Friday, the August payrolls report on September 3rd, and if that really may be a defining moment as to whether or not the Fed can move or not, Tom.
Let's get to the data now and do a morning brief. We've got an important equity guest to get you started strong on a Monday. Futures up 16, Dow futures up 156. The VIX isn't where it's supposed to be. The VIX is supposed to be in like 16 or 17 and a half. It's 18.66, as Kaylee Lines mentions, a 128 10-year, 30-year bond back out to 1.89, nowhere near 2%. But we'll take it. That real yield in under a negative 100 basis points. Oil even lifts this morning. Brent back to $67 a barrel. And dollar still planted, a stronger dollar above 93 on DXY. We watch Euro 116 is a stronger Euro to 117.27. I was in the rain all weekend. I blessed the rains in Central Park, so I need a briefing. Here's Lisa.
Oh, boy. Here we go. We'll have him singing. I will, yes, later in the show. It's a risk-on day today, and a lot of people are looking at the fact that we saw this huge dip of 0.6 of a percentage point in the S&P last week and thought, it's time to buy the dip, which is where we are right now. Interesting, though, to see the high-frequency data that is coming out with an increasing deterioration due to the Delta variant. 9:40 a.m., perhaps we'll get a sense of this U.S. market manufacturing and services PMI data, following some European data that we got overnight. UK in particular seeing the biggest fall to the lowest level in 6 months for some of the PMI data over there. How much does this reflect a pause versus a sustained slowdown in the economic recovery? 10 a.m., we also get U.S. July home sales, existing home sales data. How much strength do we see continuing? Yes, we're expecting a deceleration. but we're at very high levels. Let's be very clear. The housing market is still very hot in the United States and frankly around the world. And today, this is interesting. In Washington, D.C., Congress members are on vacation, but they're not anymore as of today. The House of Representatives is being called back. Nancy Pelosi wants to hold a vote on the agenda of President Biden with the resolution passed in the Senate last week on the budget, hopefully getting passed at least if she can wrangle Democratic consensus. And this is their hope. However, a lot of questions are emerging. Tom, the margins are very narrow here. We don't have a lot of room for Democratic disagreement at a time when a lot of people are baking in the expectation for Biden to get through this $4.1 trillion agenda that still has a lot of asterisks and uncertainty.
Yeah, Mr. Hoyer suggested no voting before 6:30 p.m., and we've got to get to that. And the news flow out of Afghanistan, folks, to be honest, is just flat out challenging. Any number of reports that the Taliban have simply said they will not extend out past August 31. I'm a little unsure of that language, but a number of reports there from Reuters, the National Post of Canada as well. And the cacophony of Afghanistan leads to how does that get to Pelosi? And for that matter, what does it mean for the markets? Bill Dudley, scheduled to join us, the former president of the New York Fed here in a bit. Right now, Lori Calvasino with us, RBC Capital Markets. Lori, it is a resilient market. Is it a market that can break out to new highs?
So thanks for having me, Tom. Thanks for having me, Lisa. Look, we're still in the camp that things will get a decent sized pullback before the end of the year. So we've got a target at 43.25 on the S&P. And look, I think what was interesting in the price action last week, it felt like we had a bit of a growth skirmish to start the week. We saw the index falter and we saw defensive sectors leading the charge. When that ends up happening, the market really can't sustain this move to the upside. Now, what we saw towards the end of the week is that those jitters did calm down a little bit. Tech started working. We started to see just some stability in the index return. But when you have fear seep in, markets really can't climb. When you have sort of that nervousness and that shift to high quality, markets can climb that wall of worry. But it's a very delicate balance. And frankly, it didn't work for most of last week.
Well, but honestly, how big is this wall of worry, Lori, if we have the Fed that is backing the market, if we have the potential, a greater potential, frankly, for federal fiscal stimulus if the slowdown does persist? I mean, doesn't policy support sort of completely cancel out slowdowns that might otherwise come up?
I think that's one of the reasons why over the last, sort of few months, we've seen a lot of nervousness in the market just sort of expressed through, well, I'm uncertain I'm going to go to high quality. I'm not going to go to defensives. I think that has helped bolster that case for moving to the secular growers. But we do know that we're starting to wind down some of these programs, or we can sort of see the light at the end of the tunnel. So I think the power of that to sort of bolster markets going forward at least has a diminished impact, even if you're not pulling the rug out from the market all at once.
But we have seen also underperformance of small caps. We have seen a rotation out of cyclicals. Can we glean any confidence in equity valuations based on this discretion that we're seeing on the part of fund managers?
Look, I think that, there are a couple different questions, I think, baked in there. I think it's a great question. But I think in terms of small cap, I think that we've seen so many worries manifest in the dramatic underperformance of small caps since March. I think at first it was the impact of inflation on profit margins, which really didn't end up coming through. But I think worries were expressed there. Investors have fretted about the negative feedback that you'll get on demand from inflation. That's also been expressed in small cap. And now I think you mentioned the softening in the high frequency indicators. I think some of the short-term, sort of economic damage from the Delta variant, I think that's manifest in small cap. But small caps have, at the end of the day, not completely collapsed. We haven't seen them go into bear market territory. So there's, a little bit of that resilience that we will be able to turn the corner still showing up in that data set.
Is it time to get more defensive within your equity allocation, though, Lori?
We essentially did that, Kaylee. We actually have been dialing down the cyclicality. I don't make sector recommendation changes all that often, but a few weeks ago, we actually did pull down materials, which was our least favorite of the cyclicals. We're sticking with financials and energy, but we did actually boost the tech sector, the proper tech sector. It doesn't include the internet stuff, but we did pull that up to an overweight from a market weight. And we basically said going forward, if we're thinking about the next 12 months or so, we want to be very balanced between sort of the defensiveness of secular growth and the cyclical oriented sectors. So we did actually make that sort of shift on the dial.
So you're looking out 12 months. I'm looking out the next, 3 months and change, and wondering if in 2021 we will see a 5% drawdown at any point in this equity market. What would be the catalyst for that?
So I think we got a little bit of a hint of it last week with concerns on the growth outlook. And look, I'm not saying that anybody's anticipating we're going to have a recession or anything like that, but I do think there had been some complacency on the economic data that investors had, or some deterioration on the economic data. And there have been, frankly, some complacency about the impact of this Delta variant from market participants. So I think that was a little bit of a wake-up call, a little bit of period of digestion we had to have. But let's just zoom out a little bit. What was that, sort of reaction to the Delta variant all about? It was an unanticipated bit of bad news that hit the market and really challenged investors' assumptions of what they thought going forward. So I think the answer in there, Kaylee, it's probably something that the market is not able to anticipate. With valuations where they are, with sentiment as stretched as it is, this is not a market that has a lot of room to absorb bad news when we do get it.
Lori Calvasina, thank you so much. Greatly appreciate it. We do this with futures up 14. The percentage changes when I last looked pretty even all in all. Small caps and the Russell looks up 0.9% to Ms. Calvasina's comments there. Lisa, your thoughts on the equity market after your weekend reading?
Honestly, the fact that we've already seen a sell-off in certain sectors, we've seen a rotation out of cyclicals, I think that's important. I think that the idea that dividend payments have been accelerating and upgraded, frankly, they're on pace to be the second most ever this year. Tom, there's a lot of fundamental support to this. And then you hear corporate executives not as worried as the health officials about the Delta variant and not seeing the slowdown to the same degree. You pair that with the slowdown in economic data, you get a muddle. However, it does not seem like we're heading into any sort of crash or anything, substantial when it comes to what the sell-off could be.
Yeah, Kelly, in the back of the week, it seemed like almost a two-part equity market. There is an equity market that's really pulled back, and then there's a group of stocks, we know the names, that haven't.
Yeah, a bifurcation, some may call it, Tom. But broadly, I'm looking at an equity market. We're north of 4,400 on the S&P 500, and the average year-end target, when you look at strategists' targets on the street, is 4,335. So we have already been, and we have been for some time, above where strategists see us ending the year. The question is, do those strategists need to play catch-up, or is this market going to come down, Tom?
Well, it's going to be interesting to see with the economic data, and of course, what we see Friday. We will have coverage Friday for a different Jackson Hole. We thought we would be on the edge of that beautiful sort of swamp and field over to the Grand Tetons. That's not going to happen, but there'll be plenty of interest at Jackson Hole. Michael McKee with important conversations, and of course, Chairman Powell's speech. We'll have complete coverage of that Friday as well. Coming up, David Leibowitz, this with the futures up 14, the VIX 18.70. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Bloomberg's learned that British Prime Minister Boris Johnson will push President Biden to delay the departure of U.S. troops from Afghanistan. That's to allow for more and safer evacuations. The president has already said he might have to extend the deadline for U.S. troops leaving past the original August 31st date. The U.S. and its partners have now flown out more than 30,000 people from Kabul since August the 14th. In Tennessee, at least 22 people were killed and dozens are still missing after record rain sent floodwaters surging through rural areas. Up to 17 inches of rain fell during a 24-hour period about 60 miles west of Nashville. Rescue crews are searching destroyed homes for survivors. Tropical Storm Henry soaked the U.S. Northeast with rain after coming ashore in Rhode Island. The storm left a trail of power outages from New Jersey to Massachusetts. About 1,000 flights were canceled, and Amtrak had to cancel trains between New York and Boston. Bitcoin has gone over $50,000 for the first time since mid-May. The world's largest digital coin is now up 72% since a July low. The total crypto market has seen its value rise almost $1 trillion in the last month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.